Testing, 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 testing. That's what. Testing, 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 test, testing, testing, testing. No, that's not. Test.
That's it. Hello? Much. Yes. And the easier listen. 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 It's okay. Give me the volume. Increase the volume a little. Yeah. Listen. Increase. It's okay. Okay. Good morning, ladies and gentlemen. Please, we're going to start any moment from now. My pleasure engagers to be patient a little. You can see on the board there the Zoom ID for this occasion. You can text it to the organization so that they'll be watching you live. The Zoom ID, meeting ID is 780-470-5987. The password is 193067. You can just copy or text to your organization any part of the world. We are going to stream this activity live today. So the Zoom ID is there on the board. And the password, if you text that to anybody in any part of the world, they will connect with us live. So you can do that seamlessly. Thank you once again. You're welcome. Relax. If you need any urgent attention in terms of facilities where to issue your subjects indicate, we have our secretariat behind. The toilet and the convenience is just by the left hand side as you're stepping out of the hall. If you have any special requests you want to make, just raise your hand, call me, I will attend to you, or call or any of the event secretariat members. Once again, you are welcome. We are expecting His Excellency the Deputy Governor, who is going to represent the governor here. Minutes. We are getting in touch with them. They will be here. For coming, especially our delegates from Abuja. It's been a wonderful experience. We were live on radio, CRBC TV, we were on Hit FM, and the interview was wow. We appreciate you. Calabar means come and live and be at peace. And I'm sure we're going to have a wonderful experience since yesterday and tomorrow too. Even on Thursday, you'll be taken around. You're highly welcome. If you're representing any organization that you want to be recognized, please go to the secretariat, register it there. I will announce it. No seat will be empty here. Thank you very much. Once again, the meeting ID 780-7470-5978. The password is 193067. The technical team has just told me that we're also live on YouTube. We are live also on Facebook. If you have your system and if you are digital in nature, in compliance, just get along, you see it there. The volume down so high. While we are waiting, please. On 2.
Hospital as a whole is not comfortable.
I'm not hearing you.
Good morning once again, ladies and gentlemen. Please, let's settle down. We're about to start the event. Stanley, are we set that way? The Deputy Vice President. Mr. What? Okay, he's here. Mr. Ike, I don't know whether he's here, sir. Okay, sir. Please, let's settle down. Ladies and gentlemen, once again, the event for today, I'm sure everybody has a folder. If you don't have a folder, just raise your hand. They'll give you one. There's a program in your folder. We'll be religiously guided by that program so that we don't take the whole day without achieving the purpose of coming here. You are highly welcome once again to our 2021 annual tax week. The theme again is emerging, understanding emerging issues in the Nigeria tax environment, enhancing voluntary compliance. Let's go now as I call on Mr. Ike Igboke to give us an opening prayer. Let's stand, please.
Shall rise up as we pray together.
Eternal Father in heaven, we thank you. We acknowledge you for who you are, the Almighty God, sole owner of the heavens and the earth. Father, we thank you for the gifts of life. Thank you for the privilege we have to be gathered like this. Lord, we thank you because you know the purpose for which we are gathered. Because even in your word, you recognize both the taxpayer and the tax administrator. That is why we are here, O Lord. Father, we are committing every discussion, every activity of the day into your hands, that you will lead us and guide us and give us wisdom and understanding. That all that we are going to do will not base to strengthen the governance, both at the state and federal level. So we pray that all those who are going to be involved in the discussions, Father, give them wisdom and give us the right words to use. At the end of it, oh God, may all the glory, honor, and adoration be ascribed to you. Thank you, Lord, for answering our prayers. For in Jesus' name we pray. Amen.
Thank you very much. Mr. Eke Ibuke is the Director of Special Taxes. When we want to observe our protocols for COVID, please ensure your nose mask is on and ensure you're careful who you interact with. We have a sanitizer there and people are there at the gates, please. To kickstart this occasion, we are expecting the Deputy Governor to be here anywhere from now. But I wanted to do certain protocol before he comes so that even if you are just starting, you can just join us. Let's be on our feet as we take the national anthem. This is Nigerian event. Quickly. Let's be on our feet as we take the national anthem. 1 to go. I'll rise, oh, compatriot. Nigeria, call, obey. To serve our father's land with love and strength and faith. The labor of our heroes shall never be in vain. To serve without our might, one nation bound in freedom, peace and unity. A pledge to Nigeria, my country, to be faithful, loyal, and honest, to serve Nigeria with all my strength, to defense and unity, that will hold that honor and glory. So help me, God. Thank you very much. Please may be seated. Please let me make a quick appeal, a humble one, please. If there's an empty seat in front, just come up a little. Just come up a little, please. Okay, I understand our online viewer are already on. We appreciate them. It's going to be a rewarding exercise. Quickly at this junction, by the program what I have here, by this program, I'm going to introduce the dignitaries who are here or their representative. Let me start by introducing the President, Chartered Institute of Nigeria, Chartered Institute of Taxation of Nigeria, Mr. Additional Adebayo, FCTI, ably represented by the Deputy Vice President, Mr. Innocent Ahagwa. A round of applause for him. Thank you, sir. I also have Mrs. Banke Okani. Mrs. Okani is the lead faculty head, the dean faculty, tax policy and administration in FCITN. A round of applause for her. We also have Mr. Gonakpe E, the Calabar Chairman, Chartered Calabar Chairman, Calabar Chartered Institute of Taxation of Nigeria, Calabar District Society. Is here a round of applause for him? We have Mrs. Adefose Adefi Soya Awobade. Is from Abuja CITN. A round of applause for her also. We also have Mr. Olainde Olafemi. A round of applause for them. They came from Abuja CITN. We have Mr. Yamo Alex. We have Mr. Ajenife Nengi. We have Zedman Iris. We also have representing the Commissioner of Finance Cross River State, Mr. Ikan Gebri. A round of applause for him, sir. We have Mr. Esen Ekorebi, one of the facilitators here. We also have Mrs. Oba Osang. And I want at this juncture to also introduce and recognize statutory bodies who came here representing the organization like the VIO, the Customs, MPA, corporate organizations. We understand the Chief Tax Controller Calabar is here, Chief Temi Ketin Alphonsus E. A round of applause for him. So will you greet us? I want to know him. Okay, you're welcome, sir. There are other dignitaries who are here. I may not mention all, but let me at this juncture introduce the Executive Chairman, Cross River Internal Revenue Service, Mr. Akpanke Iyoga. He's here with us. A round of applause for him. Our online participants, we appreciate you. I'm convinced you are watching us. If you're hearing clear, let's wave that hand. Let me see. Thank you very much. Thank you very much. We appreciate you, your time, inconvenience whatsoever. You enjoy the stay with us. God bless you. Mr. Isene Korobi, I recognize you especially again. If there are other people who are here, I want to get the name, but everybody here is a VIP. You are highly welcome. And from whatever organization you're representing, we appreciate your coming here. Thank you very much. We look at you as critical stakeholders in the development process of this state, and that's why we invited you to be here present. It's going to be a very useful session, a very useful interactive session, and we are being live all across, all over the world. Whatever your contribution gets straight to the point, at the end of the day, I can assure you, we don't waste your time coming here. Thank you very much. Thank you, ladies and gentlemen. At this junction, look at your program. We are starting the opening welcome address. We're going to take a welcome address by the Executive Chairman, Cross River Internal Revenue Service, Mr. Akpanke Iyoga.
Gentlemen of the press, ladies and gentlemen, on behalf of the Cross River State Internal Revenue Service, I wish to heartily welcome the
October 12th, 2021. I'm delighted to welcome you all this occasion of the Taxpayer Sensitization and Enlightenment Program, which is the result of collaboration between Cross River State Internal Revenue Service and the CITM. As you are aware, taxation is dynamic in nature. Therefore, we must keep abreast with the latest development and engage the taxpayers as a very important stakeholder in the tax system globally. The Institute is proud of this collaboration because it aligns with the goals of the Institute, which prides itself as a knowledge-based institute. We commend the management of Cross River State Internal Revenue Service for acceding to our request to organize this program at a time like this, when the polity is replete with issues relating to fiscal federalism, particularly the jurisdictional issues on collecting authority for value-added tax. One of the key elements missing in tax mobilization efforts in Nigeria today is the seemingly disconnect between the taxpayers and the tax authorities, resulting in low tax compliance. Such disconnect can be abridged with a forum such as which we are witnessing today. Distinguished invited guests and participants, this program is intended to provide in clear and simple terms, without any ambiguity, the various taxes applicable to corporate entities and individuals, the mode of filing returns, due dates of filing, penalties for default, and so on and so forth. In every tax system, the world over, Nigeria inclusive, there are stakeholders who have their respective roles to play. Notably, the program is intended to provide a platform for taxpayers as a critical stakeholder to make their concerns, suggestions, challenges known to the tax authorities with a view to forging a common front that recognizes the unique role of every stakeholder. Taxation is widely known to be a veritable source of revenue to the government, but this application is not one that is primarily voluntary in many parts of the world. As a matter of fact, if the opportunity presents itself, taxpayers will want to pay the possible minimum or evade tax in entirety. Oftentimes, coercion and other actions are exploited on the part of the tax authorities towards the eliciting compliance. Oftentimes, this situation is due to dissatisfaction with the level of service delivery, quality of governance, and accountability on the part of the government. This notwithstanding, the starting point is for taxpayers to fulfill their obligations in line with the relevant tax laws as administered by the tax authorities at federal, state, and local government levels. This is as opposed to an erroneous impression held by many citizens who demand for government to provide all the needed amenities before paying taxes. Of course, this is also the erroneous assumption that tax authorities as collecting agents are responsible for the non-deployment of revenue generated for good governance. This is not the case, as the tax authority only collects and remits to government, who in turn determine how best to deploy the funds. In order to have the moral right to hold government accountable, taxpayers must play their own part. The Nigerian tax system is confronted with many issues and challenges such as multiplicity of taxes, of solicits of tax legislations, poor database, tax outing, complex nature of Nigerian tax law, and so on and so forth. Many taxpayers are also concerned about issues related to minimum tax, commencement date, cessation rules, change in accounting date, and ease of paying taxes, to mention but a few. These issues are outlined impede the level of tax compliance by individuals and corporate entities alike. These affect not just the tax system, but also disincentive to investment, both local and foreign. Indeed, some level of actions has been taken towards addressing the issues as outlined. At the subnational level, some states have harmonized the number of tax collectible in active collaboration with local government, while some have commenced the process of streamlining the manner of assessing collection and appeal procedures of levies and charges to be collected by local government through executive bills at the state houses of assembly. This shall go a long way to eliminate taxing and illegal roadblocks. It is also commendable that government has provided some level of incentive to small businesses who fall within a particular threshold. Additionally, some states government, including Cross River State, has exempted some category of individuals from paying taxes. These actions are quite commendable and will help to engender equity and reduce the level of poverty. At this juncture, I want to give the assurance that the Institute will not relent in IS effort program and will continue to engage relevant tax authorities towards achieving an efficient and effective tax system. In concluding this address, I want to thank all invited guests, representative of trade union, organized labor, employees, employers, and indeed all participants in making it a point of duty to be here. My appreciation also goes to the chairman and management of Cross River State Internal Revenue Service for partnering with us to avail participants the opportunity to be better informed about the tax system. Thank you very much for listening, and God bless you all.
Thank you very much, sir. That is Mr. Enoch Mahakwa. I read the president's address. By that president of CITN address, this occasion is formally declared open. At this juncture, I'll call on the Honorable Commissioner of Finance, Cross River State, Mr. Asukwe Ekpenyong Jr., ably represented by Mr. What's the name of it? Mr. Okan. Mr. David Kang, the Permanent Secretary, Minister of Finance, Cross River State. So you're welcome, sir. I saw you here.
To get my name correctly, I am Ikang Gabriel Francis, ACA, Permanent Secretary, Ministry of Finance, Cross River State. I'm standing in for the Honorable Commissioner for Finance, Asukwe Ekpenyong Jr., who is unavoidably absent. It's an official assignment with His Excellency, the Governor in Abuja. I bring his goodwill message to all of you. So in order of protocol, His Excellency, the Deputy Governor of Cross River State, we are still expecting him. Professor Ivari, so we are hoping he will be here. All commissioners and ESCO members, Cross River State present. Executive Chairman, Internal Revenue Service, Cross River State. All heads of MDAs here present. The Chairman, the Vice Chairman, Chartered Institute of Taxation of Nigeria, members of Council of CITN, my own very icon chairman here present, Calabar and District Society, Charles Arako, captains of industry here present, gentlemen of the press, ladies and gentlemen, you are welcome. The address presented on behalf of the Commissioner of Finance, Cross River State, thank each and every one of you that has contributed in one way or the other for the success of events. I must commend the State Internal Revenue Service and the Chartered Institute of Taxation of Nigeria. A successful 2021 annual tax week. Once again, I'm very pleased to welcome you to the 2021 annual tax week with the theme Understanding Emerging Issues, the Nigerian Tax Environment, Enhancing Voluntary Compliance. I must convey my appreciation to the Executive Chairman and members of the Cross River Internal Revenue Service for the efforts to the efficient and effective tax management of the government of Cross River State, even in the midst of persistent global economic challenges. Also, I especially commend the President and Chairman of Council and members of Chartered Institute of Taxation of Nigeria for the continuous promotion of research, professional ethics, and efficiency in tax administration and practice in Nigeria. The role of taxation cannot be overemphasized when it comes to economic development. This is basically because taxation provides the needed revenue to execute huge public expenditure, such as development projects and government activities. Cross River State government has greatly improved our internally generated revenue mechanism by deploying digital technology to automated tax administration and management processes while completely eradicating leakages and unnecessary government expenditure. This has complemented our monthly federal allocation and has immensely helped the state to meet our fiscal responsibility. One of the emerging issues of concern in effective administration of taxes is globalization and technological advancement. This concern has attracted serious consideration because taxes are the principal source of revenue that government use to finance public expenditure, which in turn promote economic growth, stability, and equitable income distribution, and for repayment of huge government commitments. It's pertinent to mention that the purpose of this conference to analyze the different tax jurisdictional gray areas that may make it easier for taxpayers to avoid or evade taxes. A measure aimed at facilitating and fostering voluntary compliance by individual and corporate organizations on their tax obligations. I'm very optimistic that the speakers and panelists scheduled to discuss some of the salient issues needed to effectively and efficiently improve on the internally generated revenue of the state, the Federation in general, will do a great deal to identify more emerging challenges while offering sustainable solutions and recommendations. Once again, a warm welcome to each and every one of you to the 2021 Annual Tax Week. Thank you all.
Thank you very much. Another applause for Mr. Ikan Gebe, who represented the Honorable Commissioner of Finance, Cross River State. Let me also recognize the arrival of the following persons. Mr. John Ndifo is here, Representative John Ndifo and Co. Mrs. Mary Fidelis Abiahu, CIT and Lagos Director, is also here. Mr. Kenneth Asimita, Calabar Chamber of Commerce and Industry, Kasima is here, Executive Secretary, and Mr. Peter A. Ube, the Accountant General of Cross River State. Round of applause for them. Thank you very much once again. The accountant is Mr. Joseph Ube. A round of applause for him. What they wrote here. At this juncture, let us take the second good message from the Chairman Calabash Teachers Society of CITN, Comrade Akpe Ogo. A round of applause for him as he speaks his good message. Thank you, sir.
His Excellency, the Deputy Governor of Cross River State, he has still been expected. And all the State ESCO members here present, the President of the Chartered Institute of Taxation of Nigeria, Mr. A.A. Adedayo, here ably represented by the Deputy Vice President, Mr. Innocent Hagwa, and all the council members here present. Please permit me to stand on existing protocol because time is not on our side. We've lost so much time and we have to set time. My assignment here is simple. On behalf of the Chartered Institute of Taxation, Calabar and District Society, wish you well in this program. This program is jointly organized by the Chartered Institute of Taxation of Nigeria and the Cross River State Internal Revenue Service. The purpose of this program is to sensitize all tax stakeholders in Cross River State. And we are here. Sensitization will enable you, tax payers, to know your tax obligations and your rights as taxpayers. Before you begin to ask for your rights, understand and discharge your obligations effectively well. That is why we are here, to make you understand your obligations and your rights, so that you'll be in a better position to pay your taxes timely and in a better position to also request for what your tax money is used for. On the side of the government, the government also has a responsibility to honestly, genuinely and properly, in the interest of the public, the tax-paying public, use tax revenue for development of the state, as well as day-to-day administration, including the provision of security, which is causing a lot of concerns for us this time around. Government may have been trying its best, but the largest room on earth is the room for improvement. Let me, therefore, use this opportunity to appeal to the Cross River State government to use the vacant space that is still in this very large room, the room for improvement. There is need for improvement in all facets of governance, at least to make us stand out as one of the best states in Nigeria. We have seen a lot of projects being executed by the state government. We want to plead that these projects should be completed within the tenure of this government. And one way of doing it is in focusing on the completion of some of these projects that will roll out and begin to generate more money for the state government to complete the remaining projects. Let me also use this opportunity to wish that an appeal to the tax consultants operating in the state to achieve a balanced position between the taxpayers who are their clients and the revenue authorities they are working for. Ladies and gentlemen, I welcome you once more to this one-week tax sensitization and pray that after this event, you will be richer and more knowledgeable with regards to your obligations, with regards to your rights, and with regards to your responsibilities. Thank you and God bless you.
Thank you, Comrade Chief. Let me recognize once again Mr. Joseph Adie. Mr. Joseph Adie is the Accountant General of Cross River State. Round of applause for him. The Secretary sent the wrong name. Ola Okunola is also from the Minister of Finance, is here. At this juncture, let me call on Chief Alphonsus Tamiketin, FCA, Tax Controller Cross River Federal Inland Revenue Service, to come and give his goodwill message. A round of applause for him. Please, a round of applause for him.
His Excellency, the Deputy Governor of Cross River State, Professor Ivara Esu, the 15th President, the Chairman of the Council of CITN, Mr. Adeshina Adebayo, ably represented by the Deputy Vice President, Mr. Innocent Ohagwa, the Commissioner of Finance, Cross River State, the Chairman CITN, Cross River State, the Chairman, Cross River State Board of Internal Revenue Service, distinguished guests, ladies and gentlemen. It gives me great honor to be invited to present to you a good message at an important gathering of policymakers, tax professionals, taxpayers such as this. It is on record that the Federal Inland Revenue Service had been partnering over the years with the CITN and the various boards of Internal Revenue Service. The Cross River Internal Revenue Service, not an exception. I wish to observe at this point the healthy communication and coexistence of the Cross River Internal Revenue Service and the Chartered Institute of Taxation of Nigeria. Given the need for taxpayers to imbibe a sound taxpaying culture, frequent changes in tax legislations, the rapid development and changes in the digital states, and the recent rises in government expenditure, there is no better time to bring together the government, tax practitioners, accountants, administrators, and taxpayers with policy makers. It is in view of the foregoing that I wish to sincerely thank the Cross River Internal Revenue Service, the state chapter of the CITN, well-being perseverance, and the President of Council of CITN for their efforts in making this week a reality. Your efforts are highly commendable, and I hereby solicit that other professional bodies and agencies of government emulate the CITN and the Cross River Internal Revenue Service to organize forums like this that will lead to the development of the various sectors of the state's economy and that of the Federation at large. This forum is beneficial to the tax administrators, the consultants, taxpayers, as it will lead to the enlightenment of staff and provide the much desired interface between taxpayers, financial accountants, consultants, administrators, and policymakers. Before I end this goodwill message, I use this opportunity to notify all that have challenges in filing their tax returns with the tax program software of the Federal Inland Revenue Service to visit my office for support. On this note, I want to say thank you, Cross River Internal Revenue Service. Thank you, CITN, Calabar and Business Society. Thank you, the 15th President and Council of CITN. Thank you.
Thank you very much, Controller. At this juncture, I think we need to take our tea break and start the program proper. Take good photograph outside. The chairman will lead, the deputy chairman, CITN, representing the president, will lead us out briefly with the dignitaries, and we'll take good photographs and come back and take our tea break. Please. The Calabar chapter, Lagos, the Abuja. Yes, let's, Director of IRS, you join them. CITN Abuja, the Lagos representative, the Honorable Commissioner representative, and join us. Sorry, the tea break is just after the photograph by the dignitaries, please. Please, like you went for this thing, the tape break, the photography, just that order, go and take your thesis. Please, just take your walk down there, take your thesis so that we can start this program. Please. Director, sir, please just join them there.
is locking the shop again. I think those tax people are here and he is running away from them as usual. The last time I confronted him, he confided in me. He said he had paid to some men wearing red t-shirts. According to him, it was cheaper and they gave him a fake manual receipt. As for me, Naemeka, there is no need to run. I pay my tax right here from the comfort of my shop.
You don't mean it.
Yes, so be like a maker. Pay your taxes at any commercial bank close to you, Crutech, Ekondo, and Unicode Microfinance banks, or via POS at IRS offices. You can also pay your tax online via quickteller.com/CrossRiverMSA. Collect your e-tickets immediately and obtain your receipts at CRIRS office. Don't pay money to anybody. Pay your tax with ease. For more information, call 0802-567-0608 or 0806-627-6829. CRIRS. It all starts with your tax.
This message is brought to you by Cross River Internal Revenue Service.
he's locking the shop again. I think those tax people are here and he is running away from them as usual. The last time I confronted him, he confided in me. He said he had paid to some men wearing red t-shirts. According to him, it was cheaper and they gave him a fake manual receipt. As for me, Naimeka, man, there is no need to run. I pay my tax right here from the comfort of my shop. You don't mean it.
We pay our tax. Yes, so be like a maker. Pay your taxes at any commercial bank close to you. Crutech, Ekondo, and Unicol Microfinance Banks, or via POS at IRS offices. You can also pay your tax online via quickteller.com/CrossRiverMSA. Collect your e-tickets immediately and obtain your receipts at CRIRS office. Don't pay money to anybody. Pay your tax with ease. For more information, call 0802-567-0608 or 0806-627-6829. CRIRS. It all starts with your tax.
This message is brought to you by Cross River Internal Revenue Service.
locking the shop again. I think those tax people are here and he is running away from them as usual. The last time I confronted him, he confided in me. He said he had paid to some men wearing red t-shirts. According to him, it was cheaper and they gave him a fake manual receipt. As for me, Naimeka, man, there is no need to run. I pay my tax right here from the comfort of my shop.
You don't mean it.
We pay our tax. Yes, so be like a maker. Pay your taxes at any commercial bank close to you. Crutech, Ekondo, and Unicul Microfinance banks, or via POS at IRS offices. You can also pay your tax online via quickteller.com/CrossRiver MSA. Collect your e-tickets immediately and obtain your receipts at CRIRS office. Don't pay money to anybody. Pay your tax with ease. For more information, call 0802-567-0608 or 0806-627-6829. CRIRS. It all starts with your tax.
This message is brought to you by Cross River Internal Revenue Service.
colleagues, distinguished taxpayers, and other invited guests. My work here is simple, just to raise some awareness concerning SWEET. SWEET is an acronym for Society for Women in Taxation. For our district, we've just been inaugurated into a committee, and I happen to be the one coordinating the committee for now. So I just want to use this opportunity to welcome all the ladies in the house who are SWEET members who have not identified with the district society. I just want to encourage you that we are up and we are ready to take action as women in taxation, and we are encouraging you to join us. Usually the district society meets every third Thursday of the third week in a month. So for October, the next meeting will be next week, Thursday, 21st. So if you are here, you are a woman in taxation, or you are a man who has not been identifying with the district society, we want to encourage you that from next week, we want to see your face. And the venue of the meeting is the conference room of the Cross River State Internal Revenue Service. So you are highly welcome to that meeting of Thursday, and I'm looking forward to seeing you. I want us to overflow that venue so that we start looking for a bigger venue for ourselves. So I hope and pray that you will make out time to identify with the district. And we also want to make sure that the CITN Calabar and District Society grows. We will not just be a few people trying to do activities for the institute, but all of us coming together to make the institute bigger and better in the state. So I welcome all suite members, both intending and those who are already CITN members, to not just lock their certificates in their boxes, but they should come out and identify with the group. So I look forward to seeing you. Thank you very much.
Once again, we'd like to welcome you to the Nebula Hall here in Ansari Hotel, venue for the 2021 Annual Tax Week, with a theme understanding emerging issues in the Nigerian tax environment, enhancing voluntary compliance. Organized by the Cross River State Internal Revenue Service in collaboration with the Chartered Institute of Taxation of Nigeria, CITN, Calabar, and District Society. Distinguished guests, ladies and gentlemen, just before the paper presentation, to use this opportunity once again in acknowledging some of our guests. In a very special way, I'd like to acknowledge the presence of the Honorable Commissioner, Ministry of Finance, Cross River State, who is ably represented here by the Permanent Secretary, Ministry of Finance. Can we please, in a special way, put our hands together for Mr. Ikan? I would like to acknowledge the presence of the Accountant General to the Government of Cross River State, who is also ably represented here, Mr. Peter A. Ube. Is he here? Can you please stand for recognition? Thank you very much, sir. I also, in a very special way, acknowledge the presence of Akumaye Ube of Akumaye IPA and Co. I guess he's around. I also acknowledge the presence of Mr. Ian Bassi, all the way from Lafarge, Africa. I saw him a while ago. In a very special way, I'd like to acknowledge the presence of Chief Akber, CITN, CDS, that's the Calabar District Society. Welcome, sir. I also like to acknowledge the presence of Bullets Miami, the Dean Tax Administration. Is here. Very especially, I'd like to acknowledge Olawinde Olufemi, CITN Tax Policy and Administration. You're welcome, sir. May I also acknowledge the presence of Frank Okun, Anti-Tax Agency. Mr. Kenneth Asamita of Kalsima, Calabar Chamber for Mines, Minerals and Agriculture. We acknowledge your presence. We also acknowledge the presence of Mary Fidelis Abiahu, all the way from Lagos. May I also acknowledge the presence of John Ndifon and Co. I also like to acknowledge the presence of Finance. You're welcome. Also acknowledging the presence of Yamu Alex, CITN. In a very special way, welcome, sir. Thank you very much. In a very special way, I'd like to acknowledge the presence of the former Commissioner of Finance and the immediate past Chairman, Calabar District Society, Mr. Kelly Ayamba. Mr. Kelly Ayamba is here. Can you please rise for recognition? Thank you very much, sir. I also acknowledge the presence of the representative of MI Song, the Chairman Anti-Taxation Agency. Is he here? Thank you very much. In a very special way, I'd like to acknowledge the presence of the, okay, just before that, let me acknowledge the presence of Jumafo Naimeka from the Calabar Free Trade Zone, representing the General Manager of Calabar Free Trade Zone. Thank you very much, Madam. Also acknowledging the presence of the Vice Chairman, Association of Nigerian Private Medical Doctors Association, Dr. Edith Ati. Thank you very much. Distinguished ladies and gentlemen, just before I invite the man who is going to introduce our guest speaker, very especially acknowledge the presence of the Executive Chairman, Cross River State Internal Revenue Service, our own. I decided to leave that for the last. So very distinguished guests, ladies and gentlemen, to introduce our speaker, I'd like to invite the Deputy Director of Research and Professional Standards Secretary, Policy Administration Faculty. Let's welcome Mr. Mendes Abiahu, ACTI. Let's put our hands together for him as he steps forward.
Thank you very much. Thank you. Our time is fast spent. I will plead to stand on the already established protocol, and we'll move straight to the technical session. And that is one of the major reasons why we are all gathered here today. So right now, I'm going to invite our lead paper presenter, who is going to take the team that's compliance, sensitization. So statutory application for individuals. And that is no other person than Mrs. FCTI. Before she will take her paper, I would like to let you know a little bit of the paper presenter. Mrs. Olubanke Akane is a tax administrator, and she holds a bachelor's degree in business administration from the University of Ilorin, Kwara State. She has an executive master's degree in business administration from the Lagos Business School, as well as a fellow of the Chartered Institute of Taxation of Nigeria. She has about 25 years of work experience with the Federal Inland Revenue Service, of which 15 of the years is of general management experience. She pioneered alongside other team members the creation of the transfer pricing division at the inception in 2013, and currently she is a deputy director with the Federal Inland Revenue Service as the head of division, base erosion and profit shifting, transfer pricing policy, advanced pricing agreement, and manual agreement procedure in the International Tax Department of FIRS. She has held various positions and is actively serving in various positions and organizations, which include currently the Dean, Chartered Institute of Taxation of Nigeria, Tax Policy and Administration Faculty. Her hobbies include learning, listening to music and the word, taking a vacation with the family, and so on. And also, you would like to know that she is happily married to Mr. Bioto Akame and blessed with 2 lovely children. May I invite her to come and take her presentation from here. Please, a round of applause for our lead paper presenter.
Good afternoon, ladies and gentlemen. Standing on existing protocol, because our time is fast spent. But I'd like to welcome our very esteemed taxpayers to this event, because this event is all about you. So you're highly welcome to this event. And I would also like to say a big thank you to Cross River State Internal Revenue Service for this collaboration with CITN. I won't take time, but I would want us to go straight into the presentation. So actually, as the presentation says, we're looking at statutory obligations for individuals in helping them to comply with their duties and obligations in paying taxes. So our agenda for this presentation will actually be looking at the self-assessment regime. We would also talk extensively about personal income tax and other taxes that individuals also have obligations to pay. Do taxpayers have rights? Yes, they do. We'll be looking at those rights in this presentation, and then we'll conclude. So as an introduction, this engagement with taxpayers, which is the reason why we're here, is actually another step in the implementation of the Constitution of the Federal Republic of Nigeria, our Constitution of 1999 as amended. So really, we're actually doing that which is entrenched in the Constitution, having this collaboration. Because the Constitution already itemizes all the taxes that will be legislated upon, either by the executive, by the legislature, or even at the state level or local government level. So really, the Constitution wants everyone to actually ensure that they declare honestly their income for taxes. So what are the objectives of this event? Why are we here? This objective is actually for collaboration. And like I said, we're collaborating with the State Internal Revenue Service. So really what I'll be discussing here would not be something I've heard before. I would probably be iterating what Cross River State Internal Revenue Service has always said in their own tax enlightenment. So it would also be an opportunity to have feedback from our taxpayers. It would be an opportunity to better understand your business model. And also, we're here and we'll be supporting the drive for revenue collection. Like we have heard, revenue collection is actually beneficial to all of us because that is what government needs to run. So we would also be introducing the new concept of tax compliance. Now we need to know that things have evolved, things have changed. It is no longer the time when government says, this is what you should pay as tax. We have assessed you, come and pay this. No, times have changed. Government has actually now given much more trust to the taxpayer. And as far back as 1991, which the self-assessment regime actually came into being, and it became operational in 1992. And all taxpayers now actually are expected to comply with the self-assessment regime. And really, globally, not just in Nigeria, it is seen as the most effective tax system. And the self-assessment regime is actually an affirmation of voluntary tax compliance. So the self-assessment regime is actually encouraging taxpayers to actually voluntarily comply. It's no longer about forcing you to pay taxes, but we're saying, you've shifted the ball into your courts. You come and assess yourself and tell us what you need to pay. But what is voluntary tax compliance? Okay. Sorry for that breaking transmission. 3, tax compliance. Like I said, is actually demonstrating the fairness of the tax system. So we're looking at shared responsibilities between the taxpayer and the tax authority. Like I said, the tax authority has said, you go and prepare your returns and do your filing. You know your business better than we do. And then bring it to us for a review, and we'll go back to you to let you know what the outcome is. So really, voluntary tax compliance is driven by the taxpayer's knowledge of their tax obligations. So it's actually important, this forum is actually important for us to enlighten taxpayers, because if we want them to voluntarily comply, they must know what they're complying with. They must know their income that is chargeable. They must know where they need to file returns, or maybe where they don't even need to file returns. They must know what tax payments, or even where they're exempted from tax. So this actually secures the taxpayer's support and enables the tax administration to also effectively perform. Now, what is the first step for a taxpayer? The first step for a taxpayer is for you to register. So you need to come into the tax net. And aside from the responsibility to register, the tax identification number actually has been mandated since February 2008. This has been in place. And I know that tax authorities, including Calabar, IRS, at different levels, they use electronic devices to register taxpayers. There's also presently the introduction of the new TIN, a novel initiative of the Joint Tax Board. Now, this new TIN actually also is a way to get data. Now, it's very important for us to know that data is available. Why am I stressing that? Because, for example, if a taxpayer says, oh, don't let me bother to register. If you don't register with the tax office, you're probably registered either at CAC, where you want to register your business, or even in the Ministry of Lands, where you want to get a C of O. You need to know that there's a linkage between all this data. So what I'm essentially saying is that there's no hiding place for a taxpayer, because data is all available and there's a link to all this data. And even now, we will see when we look at the changes to the tax laws, we will see that all financial institutions would even request TIN before you open a business account. So taxpayer registration becomes very crucial. What are the taxes administered by the state government? Now, there are actually about 7 core taxes in the Federation, and these 3 are part of those 7, aside from probably CIT, VAT, petroleum profit tax. These are core taxes, and these are administered by the states. So we look at them one after the other so that you would understand what your obligations are. Personal income tax is very, very important for the state. It's a direct form of taxation. So the burden is on you, who is going to pay. One good thing about personal income tax is that it is as you earn that your taxes become greater. Let me say that. So if you're earning little amounts, your tax is not that high. That's why they say it's a good tool for income distribution. And it forms a significant proportion of tax revenue. In developing countries, it constitutes a high revenue to tax collection, although it's not the same in a lot of developing economies like ours. But why is that so? Is because we are yet to tap fully into our informal sector, which constitutes about 60% of our GDP. It's important to know who is chargeable under personal income tax. So sitting here, you need to know, am I chargeable? As an individual, either you are self-employed or you are in employment, you are chargeable under personal income tax. Families and communities, essentially where you have people that you really can't determine their taxes individually. Maybe an association of traders somewhere or organizers, families and communities that maybe you can't really, it's impracticable to determine their taxes. Also partners in a partnership, trustees and executors. Tax really on personal income tax is based on residence, and we'll see who is a resident shortly. But except in special circumstances for the armed forces, and this is as mandated by law, for police, for Nigerian Foreign Service, diplomats, and so on, they are not taxed based on residence. We'll see more of that later. And of course, another person chargeable is a non-resident individual. So even if I don't live in Calabar, there are instances where I should still pay tax, even in Calabar. Persons chargeable, like I said, is a resident individual. So if you are living in Nigeria, you are domiciled in Nigeria, you are here for 1 is 3 days or more, you have a permanent place in any part of Nigeria, you have a place where you are living here in Calabar, or you are a diplomat, it means you are a resident individual. And remember, I just said that a resident individual, residence is the basis for taxation in PIT, except for special circumstances. So who is a non-resident? A non-resident is typically somebody who is not living in Nigeria, has not spent up to 1 in 3 days, does not have a permanent place, is not a diplomat. Typically, the opposite of a resident. We go on to actually look at our next slide. So what is the income that is chargeable? So now we know who is chargeable. Seated here, you know as a resident, you are chargeable. You have a partnership, you are chargeable. You are in the business administration of wills as an executor or trustee, you are chargeable. But what is the income that is chargeable? We say that the aggregate amount of income from all sources within and outside Nigeria. We call that your worldwide income. Every income you have, either in Nigeria, either outside Nigeria, you should bring it to tax. So states the law. So whatever gain you have made from your trade, from your business, from your vocation, whatever gain you've made from your employment, whatever gain you've made from occupation of property, even whatever passive income you receive, even when annuity is payable to you, all these are subject to tax. So let's talk a bit about employment. So when you receive your salary, you receive your wages, all those allowances, they are subject to tax. I'm also an employee, so I know that they are taxed. What about the benefits in kind? So you say, what really are the benefits in kind? Those benefits in kind, should they really tax it? Yes, says the law. It says that if you have a living accommodation, your official quarters, that rateable value of that quarters should form part of your income for tax. Although it could be reduced if you have been given an housing allowance. It also says that if you have a car, that car also constitutes part of, even though you've been given, a certain percentage will be taken to constitute part of your income. Although not a full car, and even in case of living accommodation, it says that if you have an accommodation probably for emergency purposes, for example, you're a doctor, and for emergency, you are given a quarters, that is not part of, will not constitute part of a benefit in kind. Where you have phone bills, wages of domestic staff, electricity given to you at the end of the year, it constitutes part of your income chargeable. So we go on to also look at other incomes that are chargeable. Like I mentioned, communities where you can't actually estimate the income for a particular individual. We also go on to look at other incomes that are chargeable in respect of partnership. Next slide. So for a partner too, your gains of profits as enumerated by the law are whatever you have from recreational passages, interest on capital, all these are listed in the law. But one important thing to know is that the consequence of you paying tax is not on the partnership, but on you as a partner. Also, whatever profit or loss will be distributed on an agreed ratio of partnership, or equally, if there's no ratio. Also, talking about trust and estates. So if you are a trust, if you are a trustee or executive on an estate, you are also liable to charge on the income you receive. And quite a number of people involved in trustees and trust and estates and settlements are chargeable as listed in the law. So if you fall into that category, you also are chargeable to tax. What about our non-resident individuals? Sometimes when you look at the fact that non-residents are taxed, you have to believe that, oh, probably it's only the FRS that will tax non-residents. But no, that's not the case. If a non-resident individual is in employment with a company in the state, then he's taxable. But if he's a non-resident that is in employment based on the fact that the physical presence is created, then the FRS becomes taxable, will be the one to tax. So for non-resident individuals, they're also based on employment derived from Nigeria, they're also taxable. It says that when their employment is wholly or partly performed in Nigeria, and he has been in Nigeria for not less than 183 days, or the employer is in Nigeria and has a fixed base, which is where I say the FRS comes in. Rounding this up on our income tax chargeable, next slide, please, is just to show a table of who should tax. We've identified that incomes are chargeable. We've identified that persons are chargeable. Who is the relevant tax authority to charge? So this is what this table shows. Next slide, to save time. So we've said that the first step is actually your tax registration. So you now know in which case you are chargeable. You now know which of your income is chargeable. What is the next step? It says you should go and file. You need to file your tax returns. And Section 51 of the Personal Income Tax Act actually talks about how you file your returns. So you need to file your returns. And I'm going to stress that aside from people in employment, the filing of your returns is 90 days from the commencement of every year of assessment. So meaning that for all the incomes you earned in 20, or let's look at 2021, for all the income you will earn in 2021 from your business, your vocation, all your incomes aside from employment, you're supposed to file by 31st of March, 2022. That is the date you should hold sacred. Also, you must declare, like I said, you need to declare honestly your income from every source. You could employ an agent. That's why we have tax consultants all over the place. You could employ an agent to actually carry out this function on your behalf, because also they are also very well grounded in their understanding of your tax obligations. Next slide. Filing of tax returns. So you look at the fact that, okay, is this all my turnover that will go to tax? No. Is this everything I make from this business that will go to tax? No. The law gives you deductions that are allowed. Maybe your transportation, calls, solely for the purpose of the business that you have incurred. These are deductions that are allowed. Although some deductions are not allowed, which are stated in the law. Also, there are some statutory deductions that will also reduce, bring you relief. they're actually tax exempt, like your NHIS, insurance, premiums, and things like that, all stated in the 6th schedule. Also, there are even certain income that are even exempt from tax, which are in the 3rd schedule of the Personal Income Tax Act. For your business, you're also giving capital allowances in lieu of depreciation. So it's not all your income that goes to tax. Even after all these deductions and reliefs, you still even have a consolidated relief allowance that government has said, okay, we'll even give you a relief allowance of 200,000 naira plus 20% of your gross income, although it's subject to a minimum tax. So those are all the reliefs that you have in place. Is it everybody that should file? No. If you earn 30,000 in the year of assessment, you don't even need to file for the whole year. I doubt if there's anybody that earns that here for a whole year. Also, like I said, the tax rates have been done in such a way that there is a redistribution of income. So tax rates start from, I think, 7%, and then it grows progressively. So depending on your income is how you are taxed in PITA, Personal Income Tax Act. And like I said, there is even a situation where if after all these deductions and everything, your chargeable income is still less than 1% of your total income. After all deductions, maybe you don't even have any chargeable income. Then the law says that you won't even need to pay minimum tax, that you are even exempted from payment of that minimum tax of 1%. So all these are what we should know. And I want to believe that in the course of this event, we would also be able to get more information on the presumptive tax regime that operates in Calabar. You also have an obligation under withholding tax, and the withholding tax rates are listed. So for example, I'm an individual and I give out a contract. Now I am supposed to deduct withholding tax on that contract at 5% and remit to Cross River State Internal Revenue Service. Also, these are rates linked to individuals or companies where you have transactions with them. These are transactions where you need to deduct withholding tax. And if it's an individual, you remit to Cross River. If Internal Revenue Service is a company, you remit to FRS. And that deduction for that taxpayer on whom you have deducted is an advance payment of tax. So it would also be a relief when they have their tax liability computed. Pay as you earn. I'm very familiar with this because I'm also in employment. And I know that for those of us in employment, we don't even have a choice. Our employers would ensure that they remit the tax deducted to the IRS within 10 days of the end of each month. And like I said, aside from all other incomes are on preceding year basis, but for employment, you pay as you earn. It's on actual year basis. So the employer already would have communicated by filling the declaration form and submitting to the IRS by 31st of January. Next slide. Okay, I have 3 slides on penalties for offenses and defaults. I'm not going to go through those slides because I want to believe that our taxpayers, having gotten education, will do all they can to comply. In my career, I've seen that taxpayers really want to comply. Sometimes it's because they really don't have the understanding. And so it's such a pity when at the end of the day, you have to impose huge penalties on them. You also feel, oh, I know this taxpayer will really have complied, but probably he didn't have an understanding. But ignorance is not an excuse. So this is why this session is very important. There are penalties. I know that we'll do all we can to comply. Please go on. skip the penalties. So there's one thing I have not talked about, especially because in our next paper, we'll be looking at new changes, things that are emerging, especially in the Finance Act. And that is the fact that our business models are changing. So now a lot of transactions are even done digitally. So our next paper presenter will dwell extensively on how individuals now have even been doing their businesses using e-commerce, and will tell you what your obligations are regarding filing and payments, where you are using the internet and all other medium digitally. So what other obligation do you have as an individual in paying taxes? When you dispose an asset, you also have an obligation to charge capital gains tax on at 10% and remit to the SRS depending on who you have disposed to. So for individuals, you remit to the State Internal Revenue Service. So your chargeable assets include assets, properties, currency other than Nigerian currency, goods and property, anything you dispose. And even the associations where you don't even need to dispose for cash, but you receive a capital sum. For example, where you receive capital sum for probably insurance and things like that, they are all listed in the law. You also need to pay capital gains tax. So capital gains tax is also paid on an actual basis. In fact, you have an option to either pay on the 30th of June to remit it, or 31st of December. What other taxes and levies? Yes, taxes and levies, majorly usual charges and fees. In this case, you don't need to file a tax return. There's no provision in the law for rendition of tax returns. But I know that I was discussing with my colleague and we were saying that, oh, this law, there was a court judgment that actually said it becomes null and void. I think in your local government versus Akwa Ibom State, the Court of Appeal was saying this law has become null and void. But at the same time, what it actually means is that because these taxes are levies, they are on the residual list. So these are even taxes that can be legislated upon by the state, and once it's legislated upon, then it has to be paid. Next slide. Stamp duties. You also have an obligation as an individual to pay stamp duties on any written or electronic documents. So for example, if you receive a receipt via email or WhatsApp, stamp duty is payable. Even for other transactions like I've listed, stamp duty is payable. And it could be on a fixed rate, or it could vary with the value of the consideration of that instrument. We also know that all of us, we are being charged electronic transfer, money transfer levy by the banks when we make transfers of 10,000 naira and above. So on both intra and inter deposits, I think the only exemption is if you make a transfer in the same bank, then you're exempted from that 50 naira charge. But if you do any other transaction, either to another bank, even your own account in another bank, you need to pay stamp duty. So stamp duty is payable. Even now, the banks, as listed in the law, they also have the obligation to deduct stamp duty and remit on certain transactions, on loan agreements, guarantor forms, and things like that. They need to remit stamp duties. And even MDAs too, where they give contracts. So for example, contracts given out by NNPC. So such have also to be, the values will be subject to stamp duty. And these are actually obligations on these MDAs. So for us as individuals, where we are also dealing with any of these documents, then stamp duty becomes chargeable. Finally, I'll talk a bit about VAT. Next slide. And just to say that VAT is empowered by the VAT Act. Now there's a change in rates. So as an individual, your charge of VAT on whoever you are supplying taxable goods and services to is now 7.5%. And when you charge it, you remit it to the FRS. FRS currently administers value-added tax. Anything could change in future because this is an issue before the courts. So it's also good that the law has specifically defined what goods and services are, so that you will know also that land and building is an exemption. You would also know that money or securities is also an exemption in VAT. I know that all this would also be covered because there are quite a number of changes in the Finance Act to VAT Act. You would also get more information about this in the next paper. Finally, taxpayers, you are our esteemed taxpayers. You are the goose that lay the golden eggs. So government must put in all efforts to motivate the taxpayer by holding his rights sacred. Do taxpayers have rights? Yes. Government is not just making demands and demands and demands on the taxpayers. Taxpayers have rights that must be respected. What are the rights of the taxpayers? We have a right to be informed, which is what we're doing. To be assisted, which is what we're doing. We have a right to be heard. We want feedback from this session because you have a right to be heard. You have a right to be issued a tax identification number and be issued for free. There is no money. There is no collection for registration for TIN. It's free. You have a right to confidentiality and secrecy. You know, and that is very important for a business, for any business. For example, in my own role in transfer pricing, you have a lot of multinationals that are really, really concerned about the fact that everything that comes to the tax office, we need to guide, because these are their business, this is what makes their business tick, and that's the information they're giving to the tax offices. So they have a right to confidentiality and secrecy. And one thing the taxpayer must know is that tax officials have actually sworn to confidentiality. So be rest assured that when your information comes to the tax office, it is actually held in confidentiality. You have a right to quality service. Nobody, no tax officer, no tax administrator should treat you anyhow. You have a right to good customer service. And that was why last week we all celebrated the Customer Service Week. And in my own office, we actually let the customers know that they are core to not just the service, but to Nigeria as a whole. Right to good service. You have a right to complain if you have any issue as a taxpayer in Cross River State Internal Revenue Service. Please walk boldly to the taxpayer service or walk boldly to the EC and tell him what the issue is. You have a right to complain. You have a right to a tax representative. There are tax consultants all over the place. You have a right to pay only the correct amount of tax. Only the correct amount of tax. If you have to pay 100, you should not pay 101. You have a right to appeal, a right to objection, but objections will be done within the time limit given by the law. Nobody should just walk into your premises and say, I'm from IRS, I want to do audit. No. You have a right to be notified that we are coming for audit tomorrow. We are coming for audit next week. They have to notify you. And don't just let anybody walk into your business premises. They need to properly identify themselves. You have a right to that. That's why everybody is issued an identity card. You also have the right to report cases of improper behavior so that tax officials would also behave properly. When you have paid all your tax liabilities, you have a right to tax return certificate, which should be issued within 2 weeks. And just as we're doing today, you have a right to know your tax obligations. Even feel free to walk into any office and say, I'm having issues regarding this. What am I supposed to do? And finally, Next slide. In conclusion, so the essence of the program is to assist taxpayers in discharging their onerous tax obligations, and in so doing, avoid unpleasant penalties for default of tax laws. No taxpayer needs to suffer penalties once you know what to do. CI10 is pleased to spearhead this tax compliance sensitization because it cultivates the tax compliance culture desired in Cross River State and in the country at large. This sensitization would also achieve the aim of promoting friendliness amongst the various stakeholders for the purpose of tax revenue maximization. Tax authorities must not relent in their efforts to continually grow personal income tax and all other taxes for economic growth and development. It is imperative to state that holding the rights of taxpayers sacred will enhance taxpayers' perception of the tax authority and drive tax compliance. Next slide, please. Thank you for listening.
Ladies and gentlemen, can we please put our hands together for Mrs. Banke Akani, FCTI. Most importantly, she talked about the rights of taxpayers, and one of them was the rights to be issued with tax identification number. So that note, on behalf of the organizers of this event, would like to inform our esteemed guests and individuals here that outside this hall, there is a desk provided for creation of taxpayers identification numbers. We also have the opportunities of filing annual returns and make payments for your taxes just outside the hall. Before we proceed, I'd like to use this opportunity in acknowledging the presence of a former Accountant General to the government of Cross River State, Mr. Henry Ojogo. Can we please put our hands together for him? I also acknowledge the presence of the State National Association of Nigerian Traders, Cross River State Chapter, Mr. Oga Anthony. So very quickly, once again, I'd like to invite my senior man to please step forward and introduce the panelists. Thank you.
Thank you. Please, another round of applause for MC. Thank you. Having taken the lead paper presentation, I know and I understand that so many of us will have a lot of questions probably in our minds, and you would like to have those questions attended to. But before we go into the question and answer, we're going to have a discussion on this paper. And the panel, they are going to look at this compliance issue from different perspectives. So if you have your questions, you can as well put it together. By the time they are done with the ones that have been given before, they will can take your questions and they will moderate and do justice to that. So I would like to invite to the members of the panel that will discuss this presentation. That's Mr. FCA, FCTI, former chairman, Calabar and District Society. Please, a round of applause for Mr. J. I will invite members of the panel. I will invite Mrs. Olani Ajoke, FCTI. She is a member of the Policy and Administration Faculty of the Organization of Nigeria. Please, a round of applause for her. I would also like to invite to the podium Anyamba. Anyamba is former Commissioner for Finance, Cross River State, and the immediate past chairman of Calabar District Society of CITM. Please, a round of applause for Honorable. also like to invite Mr. Sam Atuse. Mr. Sam Atuse. Mr. Sam Atuse is Senior Special Advisor to the Governor on Treasury and Budget. Please, a round of applause for Mr. Atuse. Thank you very much. At this point, I'm going to hand over to the moderator, and that is no other person than Mr. Konye Ade, the former chairman of CITN.
A very good afternoon, ladies and gentlemen. And so far, we have progressed beautifully. This segment of the workshop, we are going to entertain some questions. Here with me are the distinguished ladies and gentlemen repetition. Once again, welcome to this segment. The panelists have been introduced. Without wasting much of our time, the questions we have here already, I'm going to present them and they'll do justice to them. First, what I have here is a question regarding the extent, that's what extent the public perception of tax authority influence tax compliance. That's public perception. To what extent the perception of the public, I mean the perception it has on the tax authority, that will go a long way to their compliance. I want ladies and gentlemen, the panelists, any person that is free will pick the question. They are not actually meant for a particular person. The first question again, to what extent do the public perception of the tax authority influence taxpayer compliance?
Good afternoon, everyone. Thank you so much for having us here. And actually, thank you so much, Mr. Moderator. The question is very, very important for everyone seated here as taxpayers. You know your rights, and thank you so much, Ma, for the very insightful presentation. You taught us about our rights and obligations as taxpayers. So the question again is, to what extent do public perception of the tax authority influence taxpayers' compliance? I would say to a very large extent. So as a taxpayer, I want to see the government use my money efficiently to create the developments that I want in the state where I reside. So if I have that privilege of seeing what my funds are being used for, I would definitely do the right thing. You don't have to compel me to pay my taxes. I will do it without being prompted. So I would also mention that I recall there were a lot of incentives put forward by the federal government for taxpayers. There were amnesty programs for taxpayers. And state also imbibe the same culture of granting such amnesty to taxpayers, especially during the COVID. So such incentive should be a continual process. The carrot and stick approach. You do the right thing, we applaud you. If you do the wrong thing, we'll sanction you. So as much as possible, when people see that there's a dividend for the payments made on their behalf, they will continue to do the right thing without the tax authority running after them. And I'll also mention that tax compliance should be based on your social, the effects that you see around you. So if I go to the streets, my car is not in trouble because of the roads that have been made available for me. I'm seeing the dividend of such tax payments, and definitely I'll comply without anyone prompting me or without anyone bringing the stick approach upon me. Thank you.
Thank you, madam. Do you have any contribution? Okay.
Okay, my contribution just lies in the fact that it's important for us as tax officials to actually give quality service to our taxpayers. So, for example, sometimes you go to a particular store, not even because they have all you want, but because you know that when you go there, you are treated with such dignity and respect. The same thing should apply to tax administrators. We should ensure that our taxpayers are treated with high esteem. We should also ensure that we run over ourselves to ensure that all they need to meet their obligations, we give to them. Then they will have a good perception of the tax authority. And then they would even be glad to come and make their payments. Fine. The issue of what is this payment being used for is also there. And that's a narrative we also need to change with the taxpayers. So the tax authority really is not the one that will distribute the income. They only collect. And we can also see that government is making all its efforts to distribute the income as much as they can. But the narrative is that the taxpayer should not look at the tax authority and think they are the ones that are in charge of the taxes we pay to make the difference in the society.
Thank you so much, madam. Before we take the next question,
Thank you, panelists. Thank you, Mrs. Akani. Thank you, colleagues and professionals here seated. I think I will address that issue from two perspectives. One as a professional and also two as a taxpayer. We will all know that naturally as human beings, nobody wants to pay tax. It is historical. It's also biblical as well. By nature, nobody wants to pay tax, whether you're an individual or whether you're an entity. Hence, it makes the job of tax collection even more difficult. Perception is very subjective, difficult to measure. But I think one of the few things that Mrs. Akani said was the issue of communication. And if you remember back to Adam Smith's book on Wealth of Nation in 1771 and thereabout, the four key principles of taxation is fairness. That's the first. And I think within that fairness comes the issue of communication and openness as well. I think in our environment, it's more difficult when you're trying to communicate the benefit of taxation and the dividends of taxation as well. They're not very visible and not very obvious. So the issue of traceability of what you're paying in terms of your taxes becomes difficult to measure. So it then behoves on us as professionals to devise means and ways that we can galvanize the interest of taxpayers for them to pay tax and for it to be easier for them to pay tax as well. Thank you. Okay, let me just also add my own perspective to this. I think that the issue of perception is very, very, very important. And there's a concept known as tax for service. That concept requires that the receiver of tax revenue should also show the services that are provided, that the tax revenue is used to deliver to the people. So people are more amenable to pay tax or taxes when they see tangible services that are provided with the tax revenue. It's difficult to actually reconcile the revenue that is received from tax and the service that is provided. Yes, we understand that professionally, but most taxpayers out there are not professionals. They are laymen, so to speak. So they want to see. For instance, the road, like she mentioned, if the road is the streets are so bad, full of potholes, it becomes a bit difficult for the tax authority now, because the taxpayer will say all the taxes have been paid. What have you done with them? I can't even drive on the road. My car gets bad regularly. So I think that Mr. Chairman is here. I think that we will need to, and the Permanent Secretary of Finance, I can see is here. Of course, Mr. Asuya is a special advisor to the governor. I think that we need to work together to let the government know that there's a need to try to at least get the public to see that the tax revenue is actually being used for providing service. I remember what Lagos State government used to do, or is still doing. There's a concept of what they say your taxpayers money in action, exactly. So they put up billboards that show public amenities and facilities that supposedly have been provided from tax revenue. In fact, I'm aware that most corporates in Lagos are very willing to pay taxes because of that single action of government. So it's good for the public to know and to perceive positively the tax authority, and that is done, although it's the government, that the tax authority, I'm aware, Mr. Chairman, that your hands are also a bit tied because you collect this money and you probably do not have control over how it's spent. Okay, but nevertheless, you are the receiving end of the public perception. So it's good to begin to let the government know that, look, we have to do something about it. We have to do something about it so that the public can begin to perceive us positively. And I believe that that will improve tax compliance. Thank you.
Thank you so much, distinguished panelists. I want to encourage us, the taxpayers, that we should take our minds back to the Bible. When Jesus was approached with a coin, the followers are asking, what do they do when they were expected to pay tax or taxes to Caesar? Jesus simply responded, give to Caesar what is Caesar's, and to God what is God. I want to appeal to the distinguished taxpayers that let us not really be discouraged because we have not seen what the tax revenue has been put to. We should first fulfill our own obligation of paying the taxes. After that is done, we will then have the moral standing to confront the government and ask, what have you done with what we've collected so far? And when we see that done, we will be encouraged to pay more. Like the Lagos example, my brother, former commissioner, just said that he's very sympathetic that the chairman who collects the revenue has no influence on how it is spent. But I think the chairman, and we have people very close to government here, at the end of this exercise, they should be able to diplomatically pass a message to His Excellency that the taxes people are paying, we want to see it tied to some projects so that the taxpayers will be encouraged to pay more. And by doing so, these plans we are talking about will become a thing of the past. Dear panel, thank you so much. Time is on our side. We will quickly go to the second question. Ladies and gentlemen, this question will be directed to my former Commissioner for Finance and a very bosom friend and colleague. And the question goes, how does corporate characteristics influence tax compliance behavior of large taxpayers? I take it again. How does corporate characteristics influence tax compliance behavior of large taxpayers?
Start that. Now, this question attempts to address the behavior of large taxpayers in terms of how their corporate culture affects compliance. And I think that the concept of corporate culture is very important and needs to be properly understood. Now, the corporate culture refers to the general set of beliefs and behavior in the organization that directs the manner in which the organization interacts with the general public and with its customers. Now, those general set of beliefs and behavior over time define the culture of that organization. And for large taxpayers that we are specifically to address, most of them actually have defined corporate cultures. And corporate culture will refer to things like how you treat your employees, how you relate to your work environment, how you treat customers, something like recruitment decisions, how they take it, and all that and so on. Now, and especially, again, coming to what we are addressing, corporate culture also refers to how you attend to regulatory and tax issues. What's your manner of response to that? Say culture in company, address these things. Now, most organizations, the large taxpayers, have the culture of attempting this. I'll take shall we know about Google. Google, the parent company of Google is called Alphabet. Alphabet Incorporated is known for the culture of friendliness to employees. What Alphabet does is what we are told that not be there, that's why it's what we are told. They have flexible working hours for staff. They provide even hair or hairstyling services for their organizations. When you're there, you have lunch. In fact, flexible working hours means that whenever you're tired, I'm told that there's even provision for resting. You know, when you're tired from work, you go and rest and come back. Now that defines their own culture, their corporate culture. And because of that, Alphabet Incorporated has been identified as one of the 100 best companies to work for. That's corporate culture. Coming to the issue of tax and regulatory compliance, how does the corporate culture of an organization help compliance? I'll try to address that by looking at one of my clients. This is a big organization that has, in fact, as you're approaching the office, there's a large sign post that tells you that this organization is compliant with all regulatory matters and is not ready to compromise on that. Now, large taxpayers have departments, they have one of the characteristics that they have good management and they are able to employ professionals. Professionals, especially tax professionals that are in accounting department, ensure that there's regulatory compliance as much as possible. So for this client that we serve as consultants, there is a policy that as far as tax is concerned, it must be deducted and remitted religiously. And I know that
They do that because of their large size. This is an organization that remits almost about 240 million per annum in terms of taxes to payee alone, and over 300 million in terms of withholding taxes. They are still not even operating in full operation. They are still investing. Now that corporate culture, that decision to be compliant means that not only in tax matters, in all matters, ensures that even in tax matters, there's full compliance. But where there is no such culture, especially for small taxpayers, and they are the most corporate, because of their inability to have structures that will enable them to comply, there's also not so good a compliance practice in those organizations. So yes, to a large extent, an organization's corporate culture or corporate characteristic enables them and enhances compliance in terms of tax matters. Thank you.
Thank you so much.
So just to latch on what the former commissioner said about compliance and the type of company you work with. So it's just like human behavior. Some are bad, some are born bad, and they develop themselves to be bad. And some will make conscious efforts to become good. So if we have companies, you can definitely have all good companies. You'd have the bad ones. And if they see the difference made to the bad ones in terms of the actions taken by the tax authority and government, they'll take mindful steps to become good. So what I can say is, I also have clients that they'll tell you, why not wait till tax audit before we declare the full amount that we owe to government? And I tell them, you know, as much as I understand their perspective to these things because of the time value of money, I also understand that you don't want to be tagged a bad company. A company in which the tax authority knocks at your door every day, seal you up at every moment, and also put a sticker on your door. You don't want to be found that way. And you also want to have investors rely on the judgment you have put in your financial statement as a good company. So what we admonish all taxpayers to do is, don't wait till the time when the government or the tax authority come for audit. You should make conscious efforts to file your tax returns, which is the self-assessment returns, and 100% declared as the income and tax liable for you and for your employees. So in a nutshell, it takes away the penalty amount you're going to pay. It takes away the interest that you're going to pay. Those are additional costs for you. So don't be the bad ones. Always stay with the good plans and have tax savings, which the government will put out for you eventually. Thank you.
Thank you so much, madam. Thank you so much, madam. Our time is actually tight, but we will take a question here. I have received more than 15 questions. If time will permit us, we'll look at as few as we can, but the rest assured that we'll pass this to Internal Revenue Service and our distinguished taxpayers. Question is not attended to. Feel very, very free to walk into Internal Revenue Service or Federal Revenue Service to seek clarification for issues you have raised here. Time is not on our side. Please let us quickly take the third question we have here. My brother, my special advisor, what drives tax compliance amongst taxpayers in the informal sector? How best can the tax authority leverage on these enablers for even greater performance in the sector? I take it again. What drives tax compliance amongst taxpayers in the informal sector in Cross River State? Let's take that aspect first, brother.
Thank you, moderator. I think we have a very unique economic environment. Informal sector is very complicated in terms of commerce. We are agrarian state. So we have a lot of farmers, we have a lot of traders within the confines of our state. We have less of significant corporate entities in our state. So therefore, the pool of taxpayers that the state basically can tap from are from that informal sector that consists of your peasant farmers or your farmers, your artisans, and the traders and the small entities that we have around the state. And one of the ways that you can engage with them, like what Ms. Akane said in her presentation, is the issue of ensuring that they get well informed. Information is key. I remember there was a time when the Cross River State Inland Revenue Service came about with regular sessions of trying to sensitize the populace of the state on the needs of paying taxes. Such a forum or such avenues are good. We need to inform our people. We need to educate our people. Again, like what former commissioner said as well, the issue of beliefs and culture. We are much more, please indulge me, we are much more happy to pay our tithes than to pay our taxes. But Jesus Christ paid taxes. So we should encourage ourselves, irrespective of the challenges that we might face in regards to tracing taxes to assets or trace taxes to projects, that it is a right, it is a constitutional right of ours to pay our taxes, just as it's a biblical principle of ours to pay our tithes. So as individuals of the state, let's take it upon ourselves to try and encourage each other within our communities where we find ourselves. I must commend the chairman of IRS because each time I see him in gatherings, he's always talking about taxes. If you have paid your taxes. So as tax collectors or tax administrators, one of the language that we must have, or one of the things that we must always communicate with people that we meet is the issue of taxes and the benefit of taxes as well. Thank you.
A hand of applause for them, please. Distinguished panelists, I want to say thank you to you. But before we rise, like I mentioned earlier, there is a mirage of questions here. And I will seek your permission to use like 2-3 minutes and run very fast through them. One here is, should we comply in paying tax with the deteriorating state of Calabar Itu Road? Please, my dear distinguished taxpayers, this one is beyond our scope here. That road, hold on, that road is a federal road. It does not in any way, it should not in any way stop us from paying taxes. Rather, our paying the taxes will rather help in getting the road fixed. Two, based on the new Finance Act 2020, annual income below 25 million is not liable to tax. Please, my question is it applicable to company income tax alone? I will quickly answer yes. Or is it extended to Peter, that's personal income tax? It's not extended. Peter has his own special provision that if you earn less than 30,000, like our lead people presenter mentioned to us, if you earn 30,000 or below, you are exempted. Not even the minimum tax of 1%, you are equally exempted from that. Thank you. Why is that, or why is it that tax regulation is not fixed across the country as to have one uniform tax? Please, the taxes across the country, they are the same. It depends on whether it is federal, state, or local government, but they are all the same. Why you appear as if it's not the same is because of the aggressiveness adopted by the various states in the new agency. Some states are richly blessed, so they may not bother to chase me to pay my tax. Whereas some are not as blessed. So they want to go out for the very last couple that is collectible. Another beautiful question here is why it's an organization, maybe let me put it my own way. Why is an organization surcharged for filing her annual returns late? The obvious answer is that there must be a time limit for whatever is to be done. And there's a law guiding it. It's not that the tax office is deliberately fixing a penalty for that person. It's to set a timeline for compliance to be done. There are another part from this gentleman. I would like more light to be thrown on the issue of return by an organization and why a charge
why a charge, the sum of 500,000 is charged to the organization which served as the IRS agent in collecting all the taxes in such organization. Again, it's a matter of law. Agreed, the organizations, the management of the organizations, they are doing a thankless job, a job they are not paid for. But it's a legal requirement that they should be responsible in deducting the taxes and remitting. And like I just mentioned, there must be time for everything. There must be time for everything. Ecclesiastes, time to be born, time to die, time to laugh, time to cry. So there must be a regulation. So there is a time limit within which the filing should be done. You just go be good enough, perform your civic duty of making the returns to the tax office within the time specified. Don't take the option of going late and then being asked to pay the fine of 500,000 naira. So please, let's avoid that and do what is expected of us. This one is funny. I should have given this to the chairman of Internal Revenue Service to answer. The question goes, kindly explain what constitutes improper behavior by tax officers. Give example and what should payer do in the circumstance. But let me hold brief for him. Improper behavior. You are going to the tax office to obtain a piece of information, or you don't go to the tax office to pay tax manual. You go to the bank to pay your taxes. But should you care, should you need some information that necessarily necessitate you are going to the tax office to obtain same, you go approach the tax. First, there's a reception. The area you want, please, I have this person. Who can I see to attend to me? They will direct you. And any officer you approach, if the person is not competent to attend to you, he should be polite enough to redirect you to the appropriate person that will attend to you. But after exhausting all this avenue, and in your opinion, you observe what you term an improper behavior, you should walk straight to the chairman. That, look, this is what I came for, and this is the treatment I got. And then it will be addressed. I don't think this is much a problem to us who go about our lawful duty of complying to tax payments. Ladies and gentlemen, I may not have touched all. For want of time, we need to close it. Like I said earlier, if you are sent in any question that has not been addressed, please, that courage, that interest you have to pay your taxes, just get little time, walk into the tax office and make an inquiry. And in the course of our registration, I observed there was a booklet inside the pack, the registration pack they gave us. That booklet goes a long way to explain some of the things we may want to know. And in the course of this program, there are so many things we will also get to know. The questions on Finance Act, there's even a segment for Finance Act. When we get to it, we will do more justice to it. Ladies and gentlemen, thank you so much so that we can move forward to other segments of the program for the day. Thank you.
Please, can we give a round of applause to our panelists as they take their leave from the stage? Thank you. Just like has been announced, please, we have the decks out there. If you still have not been registered or you want to create your TIN or your profile, please, they will attend to you. But if you have any other question, please keep your questions coming, because we are going to have a communique at the end of this event. Each and every one of those questions will go into the communique, and a detailed response to all these questions and answers will be provided, and they will be made available to every of the participants that are seated here today. Thank you.
We'll be moving straight to the next paper presentation. But before then, permit me to quickly acknowledge the presence of a special advisor, debt management, Dr. Ajar. Are you here? Can you please stand for you're welcome, sir. Thank you. Let's put our hands together for him. Thank you very much. Mary.
Thank you very much. Without taking much of our time, we'll go straight to the second paper presentation. And the second paper presentation is going to be looking on the recent changes in the tax legislation. And this paper is going to be taken by Mr. Olarinde Olufemi Michael, FCTI. Please, a round of applause for him as he comes up the stage. Before he will take his paper, we will also want to know a little about our paper presenter. You can see Mr. Olarinde Michael. He is a multidisciplinary professional and he holds a bachelor's degree in banking and finance from UNICAL and a master's degree in financial management. So he's a Malabite. Thank you very much. He is a professional accountant, a chartered tax associate, and a chartered human resource professional. Mr. Olarinde is also a member of the Tax Policy and Admin faculty of CITN and the coordinator of the Emerging Tax Issues Subcommittee of the faculty. He is the technical assistant on tax policy to the executive chairman of the Federal Inland Revenue Service. He is currently the Nigerian country correspondent to the Commonwealth Association of Tax Administrators. And he specializes in tax policy and research and has sat on several national committees for the development of tax policies and tax legislation in Nigeria. Please put your hands together for Mr. Michael Olarinde. Thank you very much, sir.
Yeah, good afternoon, all. Good afternoon. I would like to go straight to my paper. I acknowledge all existing protocols that have been set here this afternoon, but it's a long day and I would like us to go straight to the paper. This paper may be a bit more technical because we'll be talking about tax legislation. We'll be talking about the law. For those who are lawyers here, I'm sure you know, taxation is law. And so when you're talking about taxes, you're talking about your obligation under the law. And so this afternoon, I would like us to be as, I would like your attention so that you can listen. Okay. You know, in tax, the tax system actually has what we call the tripods of taxation. And we're talking about changes to tax legislation this afternoon. So when we talk about the tripods of taxation, that's you talk about the tax policy, you talk about the tax legislation, and we're talking about the tax administration. Now, as much as government sets policy for the development of an economy, they also need revenue to deliver every economic aspect of that policy. So, and furthermore, they need to set what we call a tax policy for the government policy. So policies can be set and can stand for a long while. So need to be changing, need to be evolving due to circumstances of time, the realities of our time. Tax legislation, on the other hand, need to even be evolving more than the policies because you need to continually try to catch up with businesses, with business dynamics. You need to continue to catch up with people's behavior. And so you've heard about what we call tax avoidance, tax evasion. So that it has come to a time where there's a thin line between avoidance and evasion. Sometimes you don't, some form of avoidance move towards evasion. And so we call those ones aggressive tax avoidance. So we need to continually tune our law to ensure that we can capture as much as possible. So when we talk about tax administration, that also needs to continue to change. The tax administrators need to be trained to understand the dynamics of business at all times so that they can tax them follow them appropriately. But this afternoon, we're talking about changes in tax legislation. So the chart up here is about the changes we've had over time, the history of tax law amendment in Nigeria. So from the company's income tax, you see we had one that was on 1961 to 1979 to the collation of the law in the law of the Federation of Nigeria in 1990. And we have further collation in 2004 and an amendment in 2007. You go to the personal income tax law too. You have the Income Tax Management Act in 1961, Income Tax Management Act in 1973, Personal Income Tax Act in 1991, and Personal Income Tax Act collation in the LFA in 2004, and the last amendment which was done in 2011. I think I would like to skip because you should be able, you can read this one. Let's move. So budgetary provision, what's about changes in recent time? So we say a budgetary fiscal legislation. So the passage of the Finance Act 2019 was a significant turning point for Nigeria as it marked the return of an era of active fiscal supervision and regular review of macroeconomic environment as it stimulates economic space on an annual basis by means of instrument of Finance Act. So what does this mean? Like I said, laws have to be evolving. So if today, you know, if there's a law that it does not capture the kind of business we do, how do you tax such business? So what we're saying is that the law continually needs to be studied, the tax authorities, the legislators need to be studying business dynamics. About some years ago, you need to visit if you want to buy a suit, you need to visit a shop and buy your suit. But as you are here today, you can pick up your phone and buy a suit, and it will be delivered to you right here. Also, before now, when we start using computers, you need to take your computer to a computer engineering shop or to a specialist in computer to install a software as small as Microsoft Word. However, right now, you can sit down here and buy MS Word from Microsoft direct, and it will be downloaded onto your computer. And so the business dynamics are changing. And so that is why our laws also need to continue to evolve. So our laws have been stagnant for a very long time. And in recent time, in 2018, actually it started from 2017, we said, let's start doing a Finance Act. But that was not the beginning. During the military era, they used to, so Finance Act fiscal legislation, it's not new in Nigeria as past military regimes have actually exploited. You remember there was a time during the budget, there's always tax pronouncement by the military head of states in those times to say in this year, this is how we're going to tax certain goods. So these are things that have been happening. And the last one was actually done in 1999, which is called the Finance Miscellaneous Provision Decree there. Before we now pass over to the we went into democracy in 1999. So what is Finance Act? Because the recent changes we are now talking about is the Finance Act 2019 and 2020, and Finance Act. Say, well, what is finance? Please go back to the last slide. So I said the Finance Act is a piece of legislation that warehouses various laws for quick and focused amendment in order to facilitate an efficient and effective operations of the annual budget. So government say, how do we know what to even change? What do we want to change in the law? Can we change the whole law or a cake, or we should just pick a few? So what they do is that when the budget is prepared, you know, these days they tag a budget of recovery, budget of economic sustainability. So you look at what are the parameters that will help you achieve those policies you are setting for your budget. I know Cross River is very, the Cross River government is very good with tagging budget with some names. So we can always look at such policies and develop laws around them. So the Finance Act, what it does is to look at those policies of government and now look at the provisions of the law that we can amend to actually help in achieving those policies. Next slide, please. So the Finance Act 2019 and 2020. In 2019, which was the first one in this era, amended 7 laws. And those 7 laws are all tax laws. So we have the Capital Gains Tax Act, the Companies Income Tax Act, the Personal Income Tax Act, the Stamp Duties Act, the Petroleum Profit Tax Act, the Value Added Tax Act, and the Custom and Excise Tariff Consolidated Act. In 2020, government decided to go beyond just tax laws, decided to do some tax-related laws and some other laws that help in enhancing fiscal policies. So we have 14 laws that were amended in 2020. So you can see them: capital gains tax, company income tax, and we have the related laws that talk about the tertiary education tax law, the Nigeria Export Processing Zones Act, the Oil and Gas Export Process Zones Act, Industrial Development Income Tax Relief Act, Custom and Excise Tariff Consolidated Act, then the laws such as Fiscal Responsibility Act, Public Procurement, and Companies and Allied Matters Act. Let's go to the next slide, please. So fiscal, what are the objectives of these changes? What are the objectives of the Finance Act? Generally, aimed at curing deficiencies of major primary tax legislation by amending obsolete and contentious provisions. So what it's looking at is that what are the legislation we use often that will easily impact on the economy? So that's what it looks at. And well, broader objectives are to promote fiscal equity. So you look at businesses. So there are some instances where some businesses are seen to be either enjoying some concession more than the other. So that was one of the focus, so that you could bring everybody at par. Then reforming domestic tax laws to align with global best practices. I already spoke about how do you tax. So I now spoke about you carrying your phone to make an order and receive the order here. So in some instances, we only look at you going to that shop or to that store to make that order, and your charge, you can pay the tax. So if government was following you in the old instance, they may see that business. And in this instance, where Microsoft is supplying you those goods, software, we may not see it. So we are trying to see how to reform our law, our domestic law, so that we can capture all these transactions that are not conspicuous. So say introducing tax incentive for investment in infrastructure and the capital market. So there were need to develop the capital market. So there were some provisions that were amended to ensure that the capital market that provides capital for businesses, it's also addressed, given some concessions. So also supporting the MSMEs. It's said everywhere that the highest number of employee in every country is MSMEs. So the provision was to support them, to ensure that their business are being enhanced. So then the next one is raising revenue for government. This is very important. People have asked that they have one infrastructural deficit or the other, and how will the government meet up with all these demands? Is by raising revenue. So I go straight to the amendments that were carried out, the changes in the law. So section 2, or 2.4 of the Capital Gains Tax Act, I start with Capital Gains Tax Act. Before now, when there are transactions and capital gains tax is accrued, most of the time when it is being paid, it is when you are filing your annual returns. So let's say, for example, you carry out a transaction, you sell a piece of land, a company sells a land, a company sells an asset, a chargeable asset, and they get get capital gains. On that capital gains, tax is a capital gains tax. You are let's say you dispose such asset in February for your accounting year of January to December. You dispose it in February. Most of the time, you are expected to remit that tax when you are filing your annual returns, which is the preceding year. So most times, people don't report such transaction again because it's long gone. They just take away the money, and it's very difficult to also trace in many instances. Yes, with audit and special skill, you can trace them, but many times, also government needs money. Why should government wait for such long time for a profit again that has been realized almost immediately for a long time? So there was an amendment to the law in 2020. So as we go on, I'll be telling you which one happened in 2019 and which one happened in 2020. So in 2020, there was an amendment to the law that says that introduce what we call a filing regime, especially for capital gains tax. And that filing regime provides twice a year, so that it doesn't take so long for you to remit what you have collected. So we have the 30th of June and 31st of December. So if you dispose an asset between 1st of January to June, you are expected by 30th of June, you should remit such tax to government. And the other half, by 31st of December, you remit to government. So that's the change there. So you go to the second one, which is location of asset, charge to tax. So in the Capital Gains Tax Act, before you can, and this is specifically talking about when there's an asset that is used for international traffic. Now, what is international traffic? Somebody have an asset in Nigeria. Let's say a ship in Nigeria. You see the ship on the sea. Before you can charge tax on that ship, especially when it's being disposed, is when the owner is a resident of Nigeria. But if the owner is abroad, if he sells it off any time, you say that gains has not accrued in Nigeria because the owner is not a resident of Nigeria. So this has happened so many times that you can see a ship on the IC, maybe somewhere in Cross River here. Maybe they use it for catering services to service those people on the rig. And the owner doesn't come to Nigeria. Anytime he decides to dispose it, he gets its money and go away. So the amendment here is just to ensure that if such ship is here for a period of time and it's used here, and we can see that it's used here, that means all the economic benefits is accrued. It's coming from Nigeria. Then why should I say such resident should not be, such owner should not be chargeable to tax in Nigeria? So if you have enjoyed some economic benefit in Nigeria, when you dispose such, you should also pay some tax. So now the gains on such will be liable to tax in Nigeria. So that was the amendment to just bring, that is expanding our tax net. So the next one is an amendment that was done in 2019 and also further tweaked in 2020. So before now, there's a provision in the law. This is compensation for loss of office. So if someone is in unemployment and maybe he's sacked, he's retrenched, he's retired, and they pay him some money. And when that money is paid in lieu of the loss of that employment, before now, if the money is more than 10,000 naira, if not more than 10,000 naira, you don't pay any tax on it. And once it's above 10,000 naira, it is liable to chargeable gains. So it was reviewed from 10,000 to 10 million naira. Now, if it is now 10 million naira, you charge it to tax. And if it's above 10 million naira, you charge. But if it is 10 million below, it's not chargeable to tax. So that was that was done in reality of the present times, because the 10,000 naira has been decades ago when it was put in the law. So in 2019, this was said that 10,000 naira is exempted. However, there was a misconception that once it is 10 million, so there was a misconception that once it's 11 million, you charge it to tax. So people want to charge 10 million to the full tax. So the amendment done in 2020 was to say the excess of the 10 million naira is what will be charged to tax and not plus the 10 million naira. So the next one, please. So this is talking about the furnishing of services outside Nigeria. I've moved into Personal Income Tax Act now. So I said something, one example I use. If you give, it is very possible these days to give a consultancy service to someone outside Nigeria to perform and deliver to you online. That's coming to Nigeria. So before now, if you do that, that person will collect money. You pay the person money, also online. It will deliver your goods to you online. Your service to you online. And the transaction has ended. And the man does not pay any tax in Nigeria. Why? Because our law does not recognize such online transactions. Our law says that you have to come into Nigeria and carry on such business in Nigeria before we can tax you. So what we've done is, so in 2019 Finance Act, under the Companies Income Tax Act, it was said that once we have what we call significant economic presence, you will be liable to tax in Nigeria. And what is significant economic presence? It's saying that, okay, let's say you have a website where people make orders for such services. And you have actually accumulated a turnover of about 25 million naira. And we can see that people come up there and do such business with you. You are liable to tax in Nigeria. Let's see an example of also you have a website where people subscribe to. For example, Facebook. So you have so many subscribers in Nigeria. By the virtue of that, you are liable to tax in Nigeria, because we know that those your subscribers don't just come there and play. They come to do business. So those were there are several other conditions that were, so that is under the Companies Income Tax Act. So when you put under a legislation, you are only speaking to a class of persons. And when you talk about person in taxation, we talk about the natural person and the artificial, which means we are talking about the individual and the company. So if you have put such obligation under the Companies Income Tax Act, you know that individuals also do businesses. So you have to come and put that in the Personal Income Tax Act. So in 2019, it was put in the Companies Income Tax Act. So in 2020, that's been replicated so that you give an obligation to also individuals who carry on such business with international digital operations, digital services. So the next one, we talk about deductions allowed. So before now, under Section 20, there was an amendment that allows some deduction of pension contribution, and I think it has to be approved by the Joint Tax Board before now. So instead of saying Joint Tax Board, we already have a regulator of pensions in Nigeria. So to further reduce the work of Joint Tax Board, you don't need to go and sit down and be approving pension. But once it conforms with the provisions of the Pension Reform Act, it should be allowed as a deduction under the Personal Income Tax Act. So the next one is talking about what we call the commencement rule. So This rule was seen to be a bit complex, a bit cumbersome, and in everywhere we say tax is based on preceding year basis. But when you talk about the commencement rule, it does not follow that principle of preceding year basis. So what was done was to just break it down to ensure that you have to have earned income before you pay tax. So the preceding year basis is now activated fully without doing different complications. So the next one, please. Okay, the same thing applies to the section 25, is talking about cessation. If you're also ceasing business, stopping your business, we have such complexities too that suggest that you are paying tax, or you're paying tax twice on the same income. So that was also amended to relax the tax, the burden of tax on taxpayers. So we now come to consolidated relief allowance. Okay, so under the law before now, we have what we call gross income. So when you are calculating your relief under the Personal Income Tax Act, where it talks about all the money accrued to you was defined as gross emolument. And when you go to your table of tax rates and the CRA, it talks about your gross income. So if you take your gross emolument, same as gross income on your table of tax rates, that means you've been given a relief. Then on your income that you're supposed to deduct, that they say 1% of your gross income, you deduct it on all your emolument. And from your table of tax rate, there's still some exemptions there. So it looks as if you're getting what we call double dipping. You get these exemptions, this concession twice. So now it's now redefined to say the gross income will be after you have taken what is remaining after you have taken out your reliefs. That will now be your definition of gross income, so that you don't get double incentives. So that's what double concession. That's what was amended there. So now, minimum tax exemption. The law before now, minimum tax exemption. What it was done now to say, okay, minimum tax is now if you are earning what we call the national minimum wage, you are exempting from paying minimum tax. So what minimum tax is that there's a particular, if you don't pay tax at all, you must pay something to government. So let me break it down as simple as that. If they calculate all your taxes and it gets to a certain, it's as low, there's a threshold that is used as 1% of your income, you must pay to government. So what he's saying is that now we are not using those thresholds again. But if you earn minimum tax, minimum wage, national minimum wage, not just minimum wage, national minimum wage, so that some companies don't set different rate for themselves and call it minimum wage. So say if you earn minimum wage, national minimum wage, you are exempted from minimum tax. So what is national minimum wage? We all know that a national minimum wage in Nigeria is 30,000 naira per month. And income tax is calculated on annual basis. What it means is that 360,000 naira annually. However, if you earn 1 naira extra, you are no longer earning minimum wage and will be taxed accordingly. So the next one, please. Okay. Revision. Okay, this is talking about revision of case of objection. So I know this was a product of a particular court case. Someone was supposed to submit an objection for tax assessment that was raised on them. And when it was submitted, the tax authority said we were on public holiday. And so we did not see it. And it was actually sent by email. And so there was a court case that said, oh, so far it's been sent to an official email of an identified senior officer of such tax authority, it will be seen as a valid objection. So the law was further amended to now allow taxpayer to submit such objection by email, electronically, and also by courier or in person. So that was the amendment that was done to that provision. So right now, you can start communicating with your taxpayers with electronically, and it will be seen as a valid communication. So we now go to, there is a provision in section 108 of PITA. This is just to define what is national minimum wage. So when you now go to also the schedule, third schedule, the first paper presenter also spoke about the third schedule of the Personal Income Tax Act. That is where you can see all the incomes that are exempted from tax. So, and it states that the national minimum wage, the persons from an employment who earns the national minimum wage will be exempted from personal income tax in Nigeria. And I heard there was a follow-up question on that, which was well addressed. So next slide, please. Now move on to Companies Income Tax Act. So for section 10, this provision now mandates banks that if you open a bank account for purpose of operating a business, banks should demand for a tax identification number. So this is to ensure that government can widen its tax net. And so when you approach a bank, you are expected to submit a tax identification number. And it says that banks, within 3 months of the passage of the law, if people had account with you prior to this law, you should ensure that within that 3 months, it's been updated with their tax identification number. That's the provision there. Then section 11, charge on tax is relating. So before now, on interest relating to foreign agri loan. So before now, you get some class of exemption on if you receive a loan from someone abroad, from a company abroad, for agricultural purposes and other forms, that is, you can get exemption, such loan, or from bank. Such loan is exempt, interest on such loan is exempted from tax to an extent. So what is done now is to say, oh, not who is an agricultural company in the law. So people, different people do some things and say, I am an agricultural company. So we saw the case of a man who built iron cage to hold poultry, to hold fowl or poultry. And he says, oh, I am into agricultural business because my line of supply is to poultry business. So is it correct or not? I think I'd like to have an answer for that. Is it correct or not? Okay, so I know some will say it's correct, some will say it's not correct. So it's a dilemma. You say, no, I am in the agricultural business because supply, I enhance the agricultural value chain. So I can hear some people say yes there. I know many of us are consultants, you're going to push that through. Because the law says agricultural business. And so what the law is now saying is that, okay, why do we even want to incentivize agricultural business? Why? And one of policies, so you know, I said the law has to be developed in a way to support government policy. So we want to incentivize them. Why? For food production. For food, directly impact on food production. So the law now reduces that incentive to what we call primary agricultural production. So it further defines what primary agricultural production is. If you are producing the food, if you are rearing poultry, the fowl, that business. If you are planting yam, cocoyam, water leaf, bitter leaf, all those ones are what we see as primary agricultural production, and that is what should be incentivized. Not the man who will buy iron rods. He can end up using it for something else. And so that's what the amendment was given in that law. So we have the section 13.2 of CITA, Companies Income Tax Act. So I gave a background to significant economic presence the other time. So this is the provision under the Companies Income Tax Act that seem to tax companies that do not actually come to Nigeria physically, but carries on business probably over the internet or the other, because they are not here. Have you heard of instances where a bank can buy, let me say bank or any company, can purchase, can have a server launch, or a satellite launch somewhere, and the money is paid for from Nigeria? The man the company who launched the satellite abroad for him, or who is taking care of the satellite, has not come to Nigeria to do anything. And so, under our old law, you cannot tax such person. But from what the significant economic presence is talking about, you can easily bring such person to tax in Nigeria now. So that's what that amendment did. And also, if you receive what we call a consultancy management services and the likes, you will be taxed in Nigeria. So let me also give you an example of management service. So you see companies these days, they have subsidiaries or branch in Nigeria, and somebody is somewhere in Mauritius. He says, I'm providing what we call management service. They will even be doing as much as recruitment from Mauritius for a company in Nigeria. And so when the company makes money in Nigeria, they send the cost or for such services to them abroad. And so you start looking at these people did not come to Nigeria. How do you tax them? So this provision has further helped Nigeria to be able to cast its net wide and get its required tax from such transactions. So also we have what we call section 14.5 of CITA, companies engaged in shipping and air transport. This one too is a very big one. In the Companies Income Tax, section 14 of the law, it exempts if an airline or shipping is picking passenger from Nigeria abroad. The income he gets from there, it's what you can tax in Nigeria. However, all the passengers he brings from anywhere to Nigeria, you cannot tax that one. So it said that anything that comes in, if they bring in cargo, mails, livestock, or passenger into Nigeria, the income from there will not be taxed in Nigeria. So we see the process whereby a shipping company brings in containers of goods into Nigeria. So if you bring in a container of goods into Nigeria, you get to Lagos port, and the same shipping company will transport that container from Lagos to Calabar and drop it here. You will receive another money for transporting that ship, that container from Lagos to Calabar. Aside from that, They also receive what we call like a rental fee for every day. You know, they probably say, okay, we give you 1 day or 2 days or 1 week to use that container and return to us. And some companies, okay, let's say it's a machinery that you are not ready to use, or you are still trying to get approval to use. So where to bring it out and release the container? You look at how much it will cost you to bring out that equipment out, bring the equipment out, or how much it will cost you to be renting that container. So many of them prefer to rent the container. The shipping company continues to receive income on using the container in Nigeria. So is such income, is this said to be part of the one you brought into Nigeria? So we said, no, this one is actually another business which is done on the soil of Nigeria. You could have dropped that container in Lagos port and tell the man, take care of the rest. So if you have received another business to transport, and also you receive a rent on such, you should pay tax in Nigeria. So that amendment was done to ensure that such income too be liable to tax in Nigeria. So that was the change in that area. So next slide, please. So insurance company, section 16.2, 16.12 of insurance company. Before now, so there's a provision in the Companies Income Tax Act called section 16. So it primarily tells us how insurance companies should be taxed. So, so there were some things that you tax normal companies separately, and when you come to insurance company, it's taxed different. So it was people sat down and said, no, an insurance company is still also a company in Nigeria. And so why should you tax them separately? So there was an amendment to ensure that some of to create a parity to allow with the principle of equity and fairness, to ensure that an insurance company is also given the same treatment as every other company. And further, further create a uniform minimum tax rate for both insurance company and every other company. So in 2019, it standardizes the minimum tax to be 0.5%. And further in 2020, based on the issue of COVID and the economic circumstance, there was a further reduction to 0.25, which is supposed to be for 2 assessment years. So after which it will revert to 0.5. So we go to section 16.13. It now provides us what is the definition of gross income, because now the tax will be charged on what gross income and gross premium. That is based on life and non-life business. So those of us who have clients in the insurance, and those of us who work in insurance, we try to understand this. So let me run. Okay. We also have one section 19. Section 19 is mostly called what we call excess dividend tax. So what it means is that a company says, oh, it pays tax, and at the end of the day, declare dividend that is more than its total profits that he has declared upon which he paid tax. So government start looking at, so where did you get this money from? So in law, you say, okay, once you have declared such dividend, we see that as your profit, and we tax it accordingly. So the rare consideration say, oh, there were some income in that dividend that's actually been charged to tax before. There are some that were exempted. And, so please consider those ones before you charge the tax on the dividend. So that was done to allow such. So the next one is a profit exempted. And now we are exempting profit of a small company. So who is a small company? A company that has a turnover of 25 million and below is now exempted from companies' income tax. So also there is one on what they call the real estate investment company. So the real estate investment company, REIT, is a company that receives subscription, receives money from different persons for the purpose of investing in real estate and earn what we call rental income. And when you earn such rental income, you dispose it to those subscribers of the company. So what they are saying is that if the real estate investment company earns such income, because it does not belong to it, that income does not belong to it, it's further disposing it. You should not tax it in its hand. And when it gets to the hand of the subscribers, you go tax it again. So they said, oh, this is seen as double tax. So what you do, we say, but there is a condition to it. There is a regulator, which is the Security and Exchange Commission, that regulates such business. So what he says is that before such exemption will apply, you must conform with the provision of the Security and Exchange Commission, which says you must distribute at least 75% of such income you have received to show that actually that money, you are not keeping it in that company. And also you must do that distribution within 1 year before the exemption will apply. So the next slide, okay. Loan from connected person. So this one, people use this to, people use this to manage their taxes. So people who are connected, when this one make so much money, he says, oh, I collected loan from my brother. He gives the interest to the brother, or even pay the loan. So, well, the law allows you not to charge tax, to see it as a cost to the person, the interest. But what he's saying is that, oh, I'm going to peg the amount you are calling that loan, so that you don't just collect and erode the tax. And this is mostly done by foreign companies, saying they gave loan to Nigerian companies. So under tax, the repayment of such loan or the interest is seen as a cost to Nigerian companies. So it reduces the tax that the Nigerian company is supposed to pay. So this was done to limit such loan to 30% of their earnings before earnings before interest, tax, depreciation, and amortization. So section 9, okay, I'll quickly round up. Tax donation. So now section 25 now allows what we call, based on, due to COVID-19, a lot of people donated money as their corporate social responsibilities, even beyond to a great extent. So this provision is allowing that such donations, government should find a way to give it back. They give some back to them by way of allowing it as a concession and allowable donation under the law. So say deduction not allowed. So now we're talking about if there's a penalty that is raised. Before now it was very silent. They say now if a penalty is raised by law of National Assembly, State Assembly, or other recognized law, it should not be allowed. So people used to badge it as a cost before. So the next one is talking about commencement and cessation. I explained this under Peter. The same rule applies under CITA here, Companies Income Tax Act. And the reduction of minimum tax, I explained this under section 16, which is reduced from 0.5% to 0.25% for two assessment years. The next one, please. Okay, section 39, gas utilization of downstream operations. There is what we call a tax holiday for a company who is into gas utilization for a period of 3 years and all with a further 2 years, if to satisfactory performance. So we also have what we call the pioneer status, which gives the same concession. So we've seen businesses that are into gas utilization, when they take the one under the Companies Income Tax Act, they leave there, go take the one under another law. So this provision is saying that if you have taken from one law, you should not take similar incentive from another law. So section 40, introduction of what we call a progressive system. So now, before now, our company's income tax rate is 30% for most companies. except 20% for some small class of companies. But now we're saying that if you earn 25 million, if your income is 25 million, gross turnover, 25 million and below, you are not paying tax at all. Then from above 25 million to 100 million, you are paying 20%. Then after that, which we have the large company, you pay the 30%. Then self-assessment. Now it's saying that, okay, charge of penalties. Before now, a company like my sister, one of the panelists was talking about how their clients will say, why don't you wait till audit come and show that I have an additional assessment before I comply. So what the law is saying, so when audit comes, when they raise assessment, they say you should give them 30 days to object. So most taxpayers will wait then to object. Then after that 30 days, you have another 60 days to pay if you do not object. So what most taxpayers will wait for all this one, and what they further do is to keep government money. So this provision is saying that any time that is found that you have shortchanged government, maybe in the past, or you refuse to pay the tax, if it is 4 years ago that happened, if we come after 4 years, the penalty we are going to raise and the interest will be from that 4 years and not from the day we found out. So taxpayers have been arguing that it should be from the day they found out and objection and assessment was raised. So now it's from that 4 years ago. So to further encourage taxpayers to do the right thing and not wait for the catch me if you can system they used to do. So the next one is returns on provisional account, filing returns by non-resident. So now there's a provisions that non-resident that derive income from Nigeria. This is a strict provision that they should file returns. It's to empower the tax authority to ensure that non-residents who derive income from Nigeria even file returns so that we can know what they are doing in Nigeria. The next slide, please. I want to rush it now. The returns and provisional account, power of service to specify forms of account for SME. So now, this one, we said that a small company of 25 million below should not pay company's income tax. However, they have the obligation to file tax returns. So the law empowers the FRS to now develop what we call a simple form or a form, and also stipulate the type of document they need to use to file tax returns. This is to reduce the burden and the cost of compliance on small businesses. And book of account. So now the law now says if you operate a book of account, that if you're filing your returns and you're submitting your book of account, it should specify, it should be in English language. Before now, we've seen Chinese file return and they submit you an account that is written in Chinese. So how do you want the tax authority to interpret such account? So this one, the law is now saying that it should be in English language. So that's what the law is saying. And service, mode of service of notice, I've spoken about this under Peter. It's also saying that you can submit, you can also file as much as taxpayer can send objection by email. The tax authority can also send out assessment by email and electronic means. So communication by taxpayer, that's what I explained earlier, for taxpayer to also send by email. Next one, please. I think I would like to, okay, reduction of WAT rate. So in the law now, there's class of businesses that was moved from 5% to 2.5%, which is if it's a contract of bridges, building, power plant, and construction contract. Can we move to the next one? So I quickly, okay, move to the next one. You can read through. I want to take here. So this industrial development tax relief act, this similar. So primary, it's also saying that agricultural business under this law will be primary agricultural production, like I explained earlier. This section 25 is now further defining what a primary agricultural production is. Next slide. So in 2019, when we say small business should not pay company's income tax, you know, if anybody filing company's income tax also have the obligation to file tertiary education tax. So the law was silent on that. So in 2020 Finance Act, it was also amended to expressly provide that as you are exempted from company's income tax, you are equally exempted from tertiary education tax. Next one. So value-added tax, the supply of goods. So there's a rule for supply. Before there was a problem, what constitutes supply? So that law was amended to say, okay, what is the rule for supply? And there was a court judgment to also say, what do you supply? They say supply of goods and services. Now it has been extended to what we call the incorporate. So if it's something that we call intangible goods, now it is captured under the value-added tax act. And it's also talk about what are those goods and services. Then the tax rate, the VAT rate was increased from 5% to 7.5%. The next slide. Also registration. Now, non-residents who are carrying on business should register. So also now, there used to be before that if you do business with somebody and the person does not charge you VAT, you just walk away. The VAT is lost. And now the law says that if you buy something from somebody as a company and the person does not charge you VAT, you yourself calculate the VAT and come and remit to government. So that's the new amendment. So section 28 now increases the penalty in the law. Next slide, please. So further one, increase of penalty, then the other one is now talking about some of the exemptions that the law now gives as animal feeds, some airline, aircraft, parts. So next slide so that I can leave it. Now, Stamp Duties Act, expansion of definition of what constitutes a stamp. So to allow tax authority to introduce what we call electronic form of stamping. So if somebody refuses, does a document and does not print it out to come and give you, I want to stamp it. You can also apply stamp duty to it, even online. So you can issue a certificate doing that. Also, introduction of what we call electronic money transfer levy, which is the one we pay on our bank transfers. The next one. Next slide. Okay, this is about the Federal Inland Revenue Act. And the biggest one there is the law that is amended by Section 25 to allow the FRS to deploy what we call automation. That's electronic way of assessing and also the power to connect to electronic devices, to connect to databases of businesses so that they can maximize tax revenue. So I think that's the end. Okay. Further law to I've spoken about that. Next one, please. So also, someone spoke about confidentiality and secrecy. So this law also provides a regime to ensure taxpayers that, as we are collecting this information from you, we are going to use it well. As we are going to use it responsibly, we are not going to give it to others. And it provides a penalty regime for FRS staff and other tax administrators, including the board members that uses this law and that uses the information wrongly. So that is the provision that's amendment concerning official secrecy and confidentiality. So section 69 now defines what constitutes a taxpayer information because there was no specific definition of such in the law. So it's now further interpreted. The next one, I think that should be the last. Okay, this one is to also, we have now on E these days, a course session. This workshop is transmitted online. So during the COVID, a lot of cases were held online. And you know, we have the tax appeal tribunal where taxpayers can take their cases to. So there's a provision that allows the court, the tax appeal tribunal, to also sit remotely without physical sitting and hear cases. So this is to also provide expedited service to the taxpayer. Next one. Okay, so this one is talking about entities in the free trade zone. The law before now in Section 18 or Section 8 exempt them from tax. However, when you go to Section 18, it now says they are exempted from the provisions of all tax legislation in Nigeria. So, however, how do we know if they actually go beyond their scope? So that was the argument that was made. And say, okay, for a free trade zone enterprise, now you are exempted from tax. But it is to the extent to which such company or enterprise carries on such business within the ambit of the law. And so you will not be exempted if you contravene the provision of the NEBSA Act and all the taxes accrued to a normal company outside the zone will apply to you too. And also, we should be able to, you should be filing tax returns so that even the tax authority will understand what you're doing. Also, when it comes to PAYE, Personal Income Tax Act, the staff within the free trade zone are not exempted from paying taxes. But because the law says that, they are exempted from all the provisions of the law, of the tax law. A tax authority cannot, it's difficult for a tax authority to implement even them collecting PAYE. They say the law does not mandate me to do such. So this provision is to lift that blanket provision that covers them to allow a tax authority to do some and make them fulfill some obligation under the Nigerian law. The next one. And this ends as we go to the next session. Thank you very much.
Please, a round of applause for Mr. Michael as he goes to take his seat. Thank you very much. Please, I want to plead with those of us outside. We're going to be done with this in some past few minutes from now. So please kindly settle down while we go into the panel session. And the panel session is going to dissect this second paper presentation. I would like to also invite to the podium those that to look into the questions and solutions to other questions. So I would like to invite to the podium the moderator for the second panel session. That's Mr. Akoni, FCA, FCTI, former chairman, Calabar Industry Society. Please, sir, a round of applause as he takes his seat. I'd like to also invite Nonye Okon, FCA, FCTI, as he come up the stage. Please, a round of applause for him. He will be joined by Elder ACN Okarobi, FCA, FCI. He is the former chairman of Cross Rivers Internal Revenue Service and the pioneer chairman of Oyo Industry Society of CIT. And please, a round of applause for him. And finally, we want to invite Mr. Simon Adwi. Mr. Simon Adwi, as he joined the panel session. Please, a round of applause for him as he walked down. Thank you very much.
So this panel, they are going to look at some of the questions that have been profiled already. Please, if you still have questions, please do compile your questions and let's have them here. And we are going to make sure that we provide answers to all the questions for every one of us that are here today. And immediately after this panel session, we are going to have an open forum. And those who want to ask the questions live, they will have the opportunity to do that. And also for those who are participating online, please kindly do drop your question using the question and answer feature there. And we'll be able to collate your questions and make sure that we'll provide answers to them as well. Thank you very much as I hand over to the chairman, to the moderator to Thank you very much. So we'll move straight to the panel session. I also want to bring to our notice that Mr. Simon Ebi that joined us here. He is the legal director of the IRS and also a former chief judge of Gambia. Please put your hands again together for him. Thank you.
Good afternoon once again, distinguished ladies and gentlemen. This obviously looked like the last of a panel session for the day. I'm actually privileged to have among the panelists my former boss, and he's still my boss, in the person of Elder Esen Okorebi, FCA, FCTI. You're welcome, sir. Our distinguished paper presenter, Mr. Olayinde Olufemi Michael, thank you for a job well done. Mr. Ndoye, you are welcome. Mr. Ndoye is of Esen Okorebi and Co. You are welcome. And the learned gentleman, they said they are learned. The learned gentleman, Barrister Abi, welcome to the panel. I think we have learned from the first one, we are going to manage our time better. And good enough, this other session appears to be a little lighter a session in terms of time content. Without wasting our time, please, I would like to go very straight to the questions we have here for our panelists. Like we did in the first session, if you have any question that is not here, do it legibly and pass it to the panel very quietly. You're welcome once again. Please, our first question here goes, how does changes in Nigerian tax legislation impact on tax obligations of industries and businesses operating in the export processing zones across the country? Our limitation is NEPSA. So how does changes in legislation affect companies operating in NEPSA? I think, let me use my discretion. Maybe I should start from our lecturer that gave us a topic. If other panelists have a contribution, they can now add. Thank you, Mr. Olayinde.
Okay, thank you very much. How does it impact on companies? Now, I explained that before now, the law says you are exempted from paying income tax, company, and it goes, or any other tax. And it goes further beyond that to say the provisions of the tax laws in Nigeria, you are exempted from complying with such provisions. Now, what it means is that such enterprise within the zone does not file a tax return. And every tax authority has no business within that zone. So nobody knows what happens there. So what the law is saying right now is that even Nigeria does not intend just to give everybody blanket exemption that way. And we need to see what you are doing. How do we know that you are actually impacting the country when we don't have visibility to what you do? So what the exemption is saying that we are still exempt you from taxes, but please provide information. So now how we impact on them right now is that they will now, they are mandated right now beyond reporting to the NEBSA to also report transactions, file returns to tax authorities. Before now, they will say, oh, the law did not mandate me that I should charge personal income tax and remit under the payee scheme from my employees. So right now, it is clear that they have that provisions, and so they have to fulfill this obligation that is given to every company in Nigeria. So what it means is that they have some new compliance provisions that they need to comply with. Before, they only deal with the NEBSA authority, but right now, they also have to deal with other authorities. However, what has been done is to bring a synergy between NEBSA or GEBSA and the other authorities which they need now to comply with. Thank you. Okay, I think I want to say that the impact on the businesses operating within the free trade zone on their tax obligation is positive. Because before now, all they tell you is that we have been exempted completely. So as the lead presenter said, even the PAYE of their staff was not being remitted. And all their transactions were shrouded in secrecy. You will not even know whether or not they have fulfilled the minimum threshold of the 75% export. And sometimes they will carry out businesses. Like if you have worked in the tax office before, your personal experience will be that they cite the industries in the free trade zone, and then all the goods and services are sold in the customs territory or the customs area, which we used to call Nigeria. They used to call themselves a country within a country. And they do all manner of things without actually, I mean, under the cover of the fact that they are not subject to tax. The issue of filing of tax returns had removed such secrecy or privacy or confidentiality within them. And even then, you will see companies or businesses who are not even licensed to operate under the Free Trade Zone Authority laws, pitching their tents and shops within the confines of the Free Trade Zone and carrying out business without actually being taxed. You see some of them having within free trade zones, and then they have houses at the custom territory or the customs area. And when it comes to payment of ground rent or whatever rent, they will tell you the house that is inside town belongs to a company right inside the free trade zone. But now the amendments in the laws are taking all those ones away. Even in the motor licensing, there was a running battle at one time with the State Internal Revenue Service with number plates and even vehicle registration. The taxes which were supposed to go to the State Internal Revenue Service were not paid because they said they are not operating in Nigeria. Meanwhile, all their cars are driven on Nigerian roads. And there was a time they had a running battle with the Cross River State Internal Revenue Service. In fact, it was the governor then that personally intervened in that matter. Well, that was because the governor then was particularly sympathetic to TINAPA, which was aspiring to have the same status. So the summary of it is that the changes in the laws, the introduction of new laws had come in to positively impact on the tax obligations of these free trade zones and those operating within that zone.
Yeah, let me just add something. Actually, if you look at the regulation to the NEBSA Act, there's a regulation and there are lists of transactions which are tax exempt. It is not total. One of those, all activities, all businesses that are not related to actual purchase and sales within that zone are not exempted. So the issue of the staff pay and all of that, all the amendments we have seen today in the last presentation's paper will all apply to them, because there's a regulation even to their act that there are specific transactions which you will carry out within or outside the act and you are liable to tax. Thank you.
Thank you so much, distinguished panelists. I think Internal Revenue Service in particular know what they're doing. Most of the workers in the free trade zone, they are resident in Nigeria. They are not living in the NEBSA. They are living in Nigeria. And following our own law in Nigeria that personal income tax is resident based, the workers of the free trade zone living in Nigeria will have to pay their taxes. And I think they must pay their taxes because they are resident in Nigeria, though they work in another country called NEBSA. Thank you, my distinguished panelists. We have a second question here. What critical gaps are there in recent changes in tax legislation? If you have identified them, we would like to know those gaps are there. Those of us who are running small consultancy, we normally get interested in knowing those gaps so that we can encourage our clients to avoid tax, not to evade tax, because we define avoidance as taking advantage of a loopholes legally to avoid or to pay the least tax possible. So we are always eager to know. That will be interested. We'll be interested in practitioners here, not only the revenue officers. If there are gaps, we'll be very happy to know so that we can cash in there and make little money for ourselves. So the question again, I take it, what critical gaps are there in the recent changes? Thank you then.
Well, I have not really noticed any gap in those laws. Rather, the new laws are coming in to fill the gaps that were already in existence. For instance, the issue of payment of penalty. There was a gap, would rise a lacuna between the law itself not specifying the effective date of commencement of payment of interest and penalty, and the interpretation was always that it is only when assessment has become final and conclusive, that is when interest and penalties should apply. And that was further strengthened by a decision of a high court in Lagos State between the Lagos State Board of Internal Revenue and what's the name of that company? I've forgotten that company. But I have a copy of that law which says it is only, tax, interest and penalties are only applicable to those assessments that have become final and conclusive. Therefore, if after a tax audit, there is an assessment, and that assessment is being objected to, while that assessment is still a subject of objection, interest and penalties was not supposed to be imposed until the agreement is made. That's why Internal Revenue Service used to say, okay, the one you say you are not objecting to, what they call undisputed assessment. That undisputed assessment, that one should be paid, while the other one will be declared final and conclusive later. And it is after that that they start paying penalties. But this new law has come in to fill that gap, telling you that it takes effect from the day the liability was established. And in fact, FIRS, are they here? FIRS will tell you that they will do compound interest, that you have to pay interest on interest. In some cases, as tax practitioners, we have confronted these cases, but we are happy that those laws have come in to fill those gaps, remove those doubts, settle those controversies, and I think that's it. For now, I don't think I have seen any gap, except the paper presenter has any gap too.
Okay, go on.
Okay, I just want to say that as practitioners, this Finance Act started from 2019. We are still testing all the provisions. And for where we sit as practitioners, I think the act has actually to be very business friendly. For instance, before it was a flat rate for CIT of 30%, no matter the kind of company you're operating. But now it has become so sensitive that it tells you if your turnover is not up to this, you pay less. So I think it's something that has come to also engender voluntary compliance and voluntary payment of taxes. It is now very business sensitive. So you have no excuse again for not going to the tax man and paying your taxes, because these laws now, as we see them today, are now, like we say, the police is your friend, are now your friends. So until we begin to test them, begin to practice them, begin to apply them, then we'll be able to see the lacunas, if there are any, in the future. That's what I have to say. Thank you.
Okay, well, the first one, when you talk about gaps, I first understand the question as what are the inadequacies in the law that we need to cover. So if you check 2019, there were some definitions that were not given. We talk about gross income, gross premium, gross turnover, they were not well defined. So in 2020, it was further defined just to close such gap, because there were arguments between consultants and tax authority, we give different definitions. So, but if I come to you talking about tax planning or tax avoidance, you know, my work actually is daily to scan the law and cover such gaps. I'm a tax policy person, so that's what I do. And so you want me to now open some of the secrets for you. Actually, I also have an privilege to sit on to be part of those that actually develop the Finance Act on a yearly basis. So, but I will just give you some so that you can go with. Number one, if your client can pay his tax 3 months to the due date, you get a 1% incentive. So you can market that to your client and make a money. Number two, let's look at companies that actually have under the threshold of 25 million. The law says you must file returns before you enjoy such incentive. So you can further go to companies that tax practitioners and say, see, the law has so exempted you, but don't fall into because if you don't file the returns, you can't claim such incentive. So you go and say, let's file your returns. You're not paying taxes. It's just to provide information to government. So this can further enhance. Also, you look at businesses for VAT under the minimum threshold of 25 million. You look at it that if you are under that threshold, you should not pay VAT. So you can further enlighten. And when we say you should not pay, it means that it does not mean you should not pay when paying. However, you do not have the obligation to collect. And so the burden of remittance and filing is taken off you. So these are things you can use to even win the heart of your clients and retain your business. Thank you.
Thank you so much, distinguished panelists. Like I said earlier, this session will be lighter. I still have many questions from the audience. The very first one is an appeal. A humble appeal to the organizers to make lecture notes available to participants. As you were registering, I believe you did
furnish your email address. I am very, very sure once your email address is correct, the 2 lectures and subsequent ones we are going to have will be sent to you. We all are aware that there's no way you will grab everything. And even if you grab, you need your notes to remind yourself as we go along. So you have the lectures, please. There's a question here. If companies operating within a export processing zone are exempted from paying tax, does employees working in those companies also exempted from pay? I think we have addressed this. We now mentioned that they are resident in Nigeria. So the employees are not exempted from pay. Another question goes, sir, why the companies that are cited in free trade zone are not pay or do not pay tax to the government? I think it's related. It's only the company's income tax, which our distinguished paper presenter said, even that which is exempted for them, they are still expected to file returns. But for payee, we know that they have to pay to the country where they reside, the state where they reside, which for Calabar Free Trade Zone, they are living in Cross River State, so they pay their payee to Cross River State. Another one here is we need a copy of your 2 papers. I've said that's repetition, that has been taken care of. Then one here, what happens to withholding tax that small companies have paid since they are exempted from income tax? When we say small companies, by definition, we are referring to those companies whose turnover is 25 million naira and below. Yes, they may have entered into transactions which suffered withholding tax. And withholding tax, as we were reminded today, is actually not a tax, but a deposit for tax. And you only get it back when your tax liability is established. You use it as an offset. Now, since you are exempted, given that your turnover is below 25 million, there is still provision for refund. I know that in practice, this has to do with Federal Inland Revenue Service in particular. In practice, it is difficult to make the refund. They will say, oh, we credit you. Subsequently, when you have a liability, you can use it to set off. But I think with this, even the FIRS Act, there is room, there is a budget. They have a budget for tax refunds. So cases of this nature will not be difficult to handle any longer. If a company is a small company and it had a claim, a withholding tax credit, I think the only thing to do is to make your application to Federal Inland Revenue Service that has a budget for these tax refunds already. And once it's processed, I think you'll be paid. They won't ask you, oh, we are crediting you for subsequent set-off. That question had a little addition as to whether that refund would be treated as final tax. It can be treated as final tax, provided the turnover of those small companies is still with below 25 million naira. Please, sorry that I'm providing answers to the question. I just want us to manage time. But as I finish, any panelists can add to the explanation, please. This other question goes, compensation on the loss of employment is exempted by capital gains tax. That's exempted from capital gains tax law or exempted by capital gains tax law. What is the position of the Finance Act 2020 in respect to compensation? Well, I think our lecture was very elaborate, very clear, that initially it used to be any amount above 10,000 naira. But henceforth, with the advent of the Finance Act, it is only the quantum that is over and above 10 million naira that will suffer CGT. I think I have to read all. Can Cross River State Internal Revenue Service explain its failure
of carrying out its statutory responsibility by transferring most of its tax collection to third party? Is it that they lack personnel or capable hands? Permit me to hold brief a little for Internal Revenue Service. We are living in Calabar, especially those of us living in Calabar. Calabar is the state capital, and Calabar is also made up of local governments. And we have three tiers of government: federal, state, and local government. From my own little experience, most of the taxes that we find people on the road collecting, they do not belong to Schedule 2, which is for the states to collect. So it's a problem, but I'm aware that this very noble institute has even taken initiative already. When I say this institute, the Chartered Institute of Taxation of Nigeria, this issue has been recognized by the institute, and the institute is specially and deliberately coming up with a policy that will also streamline all the revenues that are being collected by the local governments, such that there will be transparency, there will be accountability. It will not be a question of anybody that is on the good books of the chairman putting a roadblock somewhere and collecting revenue. I think in a very short time that will be addressed. But my candid advice is this: we're all living in this environment called Nigeria. We once in a while meet these very ugly looking people. When I say ugly looking, not their faces, but their actions. The actions make them very, very ugly and terrible. Sometimes, no matter how strong you are, you can't decide to go physical with them. And my concern, my advice is always play calm with them, but be sensitive. What I do, once I cite VIO in front, if my doors were not locked, I will press central and lock the doors. And then when I get to them, say wind down, I just wind a little tip so that I could hear me. Anything I say, talk, I'm hearing you. Talk, I'm hearing you. But that by the side, we should always endeavor to do our own bits. Both VIO, road safety, they are there to check infringements. Why will I be driving without a valid driver's license? Why will I be driving without an up-to-date vehicle license? We should always check ourselves, make sure we do our own side. Once we do our own side, you'll notice that we'll be very, very strong when we meet them. Anything they're asking, here it is. Like I have 2 extinguishers in the car, not because I have money, I don't have. But one may fail, so you see fall on the other one. I have 2 sets of triangles. They are not expensive. Most of these things are there for our own safety, but we shouldn't give room to these ugly people. I still use the name ugly in parentheses for them to be harsh or treat us as if we are not humans like them. So please, I want to beg on behalf of Internal Revenue Service that the PITA, Personal Income Tax Act, does not provide for roadblocks for collection of revenue. So if you see a roadblock, it is never mounted by Internal Revenue Service. I'm not treating them as saints, but I know they are not the people. It's very, very likely, 100 times sure, that is the local government authorities. Another question here: why is there multiple taxation on small and medium scale businesses and transporters within the state, especially on their raw material and finished goods? Just like what I've said, most of those things, those taxes, they are not from Internal Revenue Service, they are from the state. And just believe me, I take the word that my noble institute passed on to us just yesterday, that they are seriously working on streamlining the revenue administration system of the local governments. I think within a short time, things will be modified. This other question goes: how much is substantial in the new, I think substantial presence, that's what this person referred. How much is substantial significance in the new law in PITA? By my own little understanding, when we say substantial, in company or significant, we do have what we describe as associate, 25%, and then the other one, no, not minority, as associate, then the other one, the main one, that's a company owning a company, having 51, holding, having up to 51%. Now, when we say substantial, I think they are significant. That's, how do I go about this? Normally, let's use cost of collection to illustrate this. If what you will get from this taxpayer is less than what it will cost you to collect that tax, that makes that tax insignificant. That is not substantial. I want to look at it this way. Any member of the panelists can also join me. But we should take it to mean that when we say significant, it is worth spending money to collect that money. If it is not worth spending money to collect that money, it is not significant. Thank you so much. I don't know if we have another question. Let me quickly. Okay. Sorry, panelist wants to add to this. Thank you.
Okay, if what is asking is in relation to the paper presented, I'm sure, or because what you've just explained, you're explaining the principle of economy when it comes to principle of taxation, that when how much you're collecting is less than, how much the cost is less than what you're collecting. But if it's about significant economic presence, which is the new concept that is introduced into our tax legislation, is in relation to what we call the taxation of the digital economy. And so we look at it that, okay, to what extent will a non-resident or someone that did not come to Nigeria physically to do business in Nigeria be said to have a significant economic presence in Nigeria? So there are rules. There's a regulation that was signed by the Minister of Finance based on the provision of the law. And it says, number one, if the company, such company earns a turnover of 25 million, because in Nigeria, if you are earning 25 million and below, you are not liable to tax. So this also says if the turnover is more than 25 million, we will see it has been significant. Then again, we must be able to trace that Nigerians, you have a website which Nigerians sign on to. And from time to time, they carry on, they relate with you on that website. You must see that they subscribe to your website. They operate email addresses on your website. So there are other rules in line with that. So we've seen has been significant. Somebody comes to your site and stream videos, watch movie on your site. I use an example of Netflix. Netflix may not come to Nigeria, but a lot of us have Netflix in our houses. DSTV may actually operate without coming to Nigeria. So we'll be seeing that if you see a lot of people streaming constantly, you'll be said to have had a significant economic presence. Thank you.
Thank you so much, distinguished panelists. I'm so sorry that we tried to rush to meet our time. A promise is given that the papers will be sent to our mailboxes. I will encourage us to read them through, because if you know, you know. If you don't know, you don't know. Thank you so much, distinguished panelists. Thank you, distinguished audience. I think this comes to the close of this segment of discussions. Thank you so much.
Can we please put our hands together for the speaker and the panelists? Distinguished guests, ladies and gentlemen, we've almost come to the end of today's session. Very shortly, we'll be taking announcements. I want to ask Mr. Mike Igbo to please come close, and also ask the Director of Admin, the person of Mrs. Omini John, to please be on standby for the closing remarks. But just before then, I'd like to inform us that the Communique Drafting Committee has just been formed, and we have Mr. Matthias Ashibeshibe as chairman of the Cross River State Internal Revenue Service. We also have Barrister Patience Egu as secretary. We have Mr. Ivabo Iyare from FIRS as a member. We also have Mr. Okon Nioye from Essien Okerebi and Co. We have Mr. Godson Osemene from the Cross River State Internal Revenue Service. We also have Mr. Ayi Okon from the Cross River Internal Revenue Service and Mr. Mondi Okonafu from CITN. Can we please put our hands together for the Communique Drafting Committee? If you have any information, especially questions as regards all that have been said today, please direct them to these ones that we have announced. Mr. John. The session continues tomorrow and will start at 9 a.m. We expect our guests to be seated on time. Very quickly, I'd like to invite for the closing remarks the Director of Administration, Cross River Internal Revenue Service, the person of Mrs. John Omini, to please step forward.
On the existing protocol, and I want to say good evening all. I want to thank you for giving us your ears and leaving all that you had to do to come for this program. I will thank mostly the organizers that we are part of. Practically say that this workshop has been very beneficial to us as collaborators with CITN and even our taxpayers. There are questions, there are issues that have been discussed that were shrouded with ambiguity. But I think after the discussions today, we have a new perspective, because we have more understanding and we have more knowledge to what has been said. I thank you all for coming. And tomorrow too promises to be a great day. Please don't miss out. The program will just follow suit the way it is today. We'll start early at 9 o'clock and we will not take your time. We'll keep specially to time. Our lateness today was as a result of the present situation in the state. It was not an intentional program. It was not done intentionally, because I know my chairman keeps to time. He doesn't work by African time. So would have started up as early as he has said. But just because of those little challenges and hitches, we have to go down and wait until the coast was clear for us to start. Thank you for coming. And I pray that God Almighty will take you back safely and bring you back tomorrow safely as we round up in Jesus' name.
Thank you very much. The event again has been the 2021 Annual Tax Week, with the theme Understanding Emerging Issues in the Nigerian Tax Environment, Enhancing Voluntary Compliance, organized by the Cross River State Internal Revenue Service in collaboration with the Chartered Institute of Taxation of Nigeria, Calabar and District Society. We'd like to thank you for our time. We hope to gather again like this tomorrow morning for another wonderful and exciting session. Until then, I want to thank you and wish you a safe journey back. I hear lunch is ready. As we leave here, let's go behind. I also hope that we go out in an orderly manner. God bless you. Okay, just before our meals, can we just say a short prayer? Please, can we just remain standing for prayers before our meal? Thank you. Pastor Nsemo, please.
Our Father, we thank you. We give you all the glory. We thank you for the success of this meeting today. Father, we are living here. We pray your presence will take us home safely to the glory of your name. Our prayer is in Jesus Christ's name. Amen.
Thank you very much. Just to inform all of us, there is supposed to have been a meeting of the Calabar District Society of CITN, but that meeting took place yesterday, so there won't be any meeting this evening. Ladies and gentlemen, I had earlier announced that we should go in an orderly manner. Let's allow our dignitaries go for their meals first. Let's allow our stakeholders and directors to go first for their meals. We have enough to go round to everybody, please. Thank you, and God bless you as you adhere to these instructions.
Let me end the meeting.
Sorry. Okay. Keep it. This time we call him. This
Yeah. No, hello, okay. What do I give? Is that give? Is
that my kid?
So what's right now? Let's finish. Let it be among our okay, we can live like that now. We can live like that, yeah.
Have you still
I'm the end meeting.
As soon as you have to find we are paying them for this. If they make mistake, charge us for this thing. I'll tell you, if they make mistake, charge us for taking it. Then they will pay me.
All right, guys, we are signing out. Meeting ending in 5, 4, 3, 2, 1. Bye.